Good morning. Welcome to my virtual private trading journal here. Oops. I think I have the right thing going on now. Looks like so. Anyway, yeah, welcome to my virtual trading journal. Developing or documenting the process of the risk-neutral trading philosophy or methodology. First of all, this is not for financial or trade advice. There's a disclaimer in the description. Any times that I mention are daylight, Central Standard Time, in this case daylight. And the same, you'll notice that I stream my entire monitor, not just the application. That's to further the transparency and the accountability, and the times down here at the bottom of the monitor on the book map, and also hours, minutes, and seconds, and calendar down here in the lower right corner on my screens. So that's that. Seems like everything is working okay now. We're streaming along here, trickling down the hill. I am, as I said, this is my virtual trading journal, and the idea here is that I don't multitask very well, or I don't, I think that it's more efficient if I do not try to do so. And I believe journaling is important. So if I were doing screen snaps and typing throughout the day, that wouldn't be very efficient. This eliminates all of that. And is more detail oriented because it captures faithfully all of the whatever I'm seeing to do with the graphics on both Bookmap and IRT, which is my charting package. And then my voiceover here gives indication or some sort of insight as to what I was thinking at the moment. It seems to be working out pretty well. I stream it to YouTube so that I can further ensure transparency and accountability. And also I can review the stream on any device, which is pretty handy because these streams start now at 8 o'clock every morning, trading day morning, and last the entire cash session, which means they go until 1500 in the afternoon. So it's a little right about 7 hours. And obviously I'm not going to sit and listen to all 7 hours, as I wouldn't expect anybody else to. I do keep a pretty extensive timestamp or chapter, chapters or timeline, whatever you want to call it, through the day, and that's input into the description every evening, so you can jump to whatever's interesting. I'm not monetized in any way here. I'm in it primarily for the subs and likes, so that would be great. Please do so. Drop something, say hi, and the comments are really welcome and appreciated. And let's get on to the next order of business here. I try to keep this format pretty much consistent every day. So let's get on to the reports and numbers. Finally, we're getting some sort of normalcy out of, Jesus, it's been pretty crazy lately, but we're getting into, this is kind of some normal reporting numbers now. We've got the jobless claims and the GDP, initial jobless claims, and we've got pending home sales coming up in a little bit. And then we have the 7-year note auction at noon. The numbers were a bit of a good, not much, but 1.96, 1.954. So, not a hell of a lot of change, but at least green, which makes people feel good. This is myinvesting.com, which is typically what I use for I like the presentation here of the jobs numbers, or the numbers, and also of the earnings, which is here now. We had NVIDIA yesterday, of course, which is a big deal. I wouldn't say that surge in economic growth, but maybe, the spin is pretty phenomenal sometimes. So that's what I like about investing.com, and it is free. Both of these services are free. This is my Financial Juice, which has basically got the same calendar over here, essentially. It does add in, where'd she go? It does add in through the day, these unplanned critical risk events like press conferences or, signings or something like that. And then on the right over here, we have more of a Squawk Box feel. Also free. You can certainly pay whatever you want. There's usually an ad here somewhere. You can certainly pay if you'd like to. But I don't feel the need to do that. All right, let's get on with the next order of business, which is the pre-market. Probably the most important thing of the day. Get the day started, right? So here is our RTH session. This is the ridiculous overnight we had 2 days, night before last. 18,000 contracts went exactly no place in anticipation of, I guess, in anticipation of the NVIDIA numbers. That's all I could really make of it. But here is yesterday's RTH session, and here's the current overnight. So what are we looking to do? Well, there's the previous RTH high. We just poked our nose through it, and now we're back up here and kind of coming back up. We've got value, overnight value so far is pretty much overlapping. This is IRT, by the way, and these are the E-minis. This is the E-mini, this is the NASDAQ mini, and this is my my micro composite higher time frame chart. This is a daily session or RTH session, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them and continue to do so until something changes, like over here, or gap up or something like here. And then by the nature of the way I have the volume profile set up, it generates the red and green lines that you see here, which are high and low volume nodes for this volume profile, and micro composite VPOC, etc. These red and green lines push automatically to bookmap, as do the session prices. This is the market profile chart. Currently now it's the full session. So here's what we've done overnight. Here was yesterday, or the full session yesterday, so far overnight. And when I want to go to the day, session, I only have to do this, and there we are. This is only the RTH sessions. So here is our live quote ticker, quote page, whatever you want to call it. We've only traded 129,000 contracts so far overnight. Day before yesterday, this was 18,000. I couldn't believe it. I thought my stuff was stuck. I was busy downloading data and whatever else, thinking something was broken. The reason these are green is because the last price is higher than the settlement. This is set up long ago to be a psychological trigger for a lot of retail people. When they see Robin Hooders and all those guys, Ninja Trader people, when they see their stuff going green, they start buying. When it's red, they start selling. Psychological thing, and it's gone for years. But where we are right now is we're positive, but 0.1% change in the ES. And then the other ones. All right, so let's look over here at our next order of business, which is Bookmap. This is my execution platform. And here is the micro composite column, where I enter the all-time highs and VPOC and all that kind of stuff manually. 6460, Yeah, it would be down there. This is the high and low volume nodes column which are pushed automatically from Bookmap to Bookmap. Jesus. I am certainly not a professional broadcaster here. You probably figured that out already. This is the full session volume profile, which started plotting last night at 1700 and will continue through today at 1600. So this is the Globex. This is not the ETH. The RTH session, which will reset this morning at 0830, and I've been having trouble with this doing it automatically as set for some time now, since the last upgraders. So I've got to deal with the Bookmap people and say what the hell's going on. I've closed off all of the other tabs I had over here for the NASDAQ and gold, and only just the ES and the MES. This is the minis and the micros. Try to reduce any kind of load on the GPU or whatever, or the program itself, so that it wouldn't lag, but it continues to do so. I'm kind of wit's end to what to do. Here is my important column. This is my notes column, and the first thing I do every day is clear the notes from yesterday. There they are. There's the percentages, probabilities, migrating volume points of control for the day, and there we go. Next, I determine the open type for today, and I change the column title to that. Now, how do you determine the open type? And I'm talking about the open type with regard to statistics. Where, if we opened right here, right now, we'd be at 6501. How does that price relate to the previous close? It's higher. And to the previous range. It's within range. So it would be then, if we opened right here, right now, it would be higher in range. There's only 4, as I said. I'll show you in a minute. Okay? That's how we do it. And then this will dictate which statistics we will apply here in a few minutes before the open to these session prices, which push automatically from Bookmap. It's really important to say a couple of things. Nothing that I do or say or in reality anybody else does, but they won't necessarily tell you this, is magical, mysterious, or in any way really complicated. It's all common sense, data, and statistics. Period. These session prices are absolutely as overnight high, previous RTH high, value area high, overnight volume point of control, release, settlement. Here we go. Now, something that can kind of trip you up is the IB high and low because of the naming. It stands for initial balance, old market profile term. What these two levels really represent, that's the high and the lows down below somewhere. They represent the high and low of the first 1 hour of the RTH trading session. Nothing more, nothing less. The POCs, of which on my charting here now you'll notice there's no indicators on either Bookmap or IRT, but I do have some specific levels which are generated by the platform. This is the full session volume profile, volume point of control, sorry, and you'll notice that it's kind of a muted yellow. Also, there is the RTH volume profile, which is a brighter yellow. Now, the volume POC. The POC is nothing more than the marker of the price level at which the most contracts have traded so far in the session. So, $44.99. We've traded 4,099 contracts, and that is the most contracts that have traded since we opened last night at 1,700. The second one of these levels is 44,100. This yellow line is going to move there. That's all there is to it. And this marks the price at which our POC was located when we closed. One of the things I do every morning now, so you can see how to do all of this stuff, is I add a naked volume point of control, and I put in 2708.25. That was the naked volume point of control from the most recent RTH auction. We can't possibly have taken this level out yet because we don't have another RTH session until the one that opens here at the bottom of the hour. So there's that. We have the VWAP for the Globex and the VWAP for the RTH, which if you're, want to split hairs, could be considered as an indicator because they are calculated. Volume, weighted average price. Also, we have the mid. That's it. Open. Is that tough to figure out? That was where we opened yesterday. It's really simple. So let's now move back to the statistics, which are quite important. Remember, we determined it was higher in range. We go to the statistic study, which is generated within my IRT, and it's right here. 4 types: higher out of range, gap up; higher in range, lower out of range, gap down. Only 4. This study looks back at 2,000 days. Of these 2,000 days, we opened higher in range, which we expect to do today, 604 times. Of these days where we opened higher in range, price revisited the overnight volume point of control 502 times, 83.1%. Bookmap, overnight volume point of control, 83.1. Bam. That's all there is to it. Straightforward, simple probabilities and math. And then we just mosey down the list over here. And the next one, order of business, is the overnight mid, and it's 76.8. Overnight mid, 76.8. It's almost embarrassing, but I think it's, how straightforward this stuff is and how so many people make it sound or try to make it mysterious, so that they can, I guess, get some clicks and likes and whatever else it is. But 75.2, and then I just simply go down the list. I'm just going to work down the list. The overnight high, 75.2. Overnight high, previous RTH or the ETH high, 75.2. It's, IRT conveniently highlights the proper open type, but only after we open. This was yesterday. This will be the one that we highlight today. And now we're at the previous value area high, which is 71.4. And that's right here, value area high, 71.4. One quick note is the value area high differs from the developing value area high or low in the following way. The value area high and low are for the previous auction. The developing value area high and low are applicable to the current auction. And previous close is 70.4. Well, there we go. Now I'm going to be really pissed, irritated, if they trade up here and take out the previous high, because remember, this is one of the criteria for our open type. If they get up here and take out this previous high, we will be higher out of range, not in range. So that would be annoying. And that happens a lot. And look at this previous close. What did I do here? I'm not reading very straight, I guess. There we go. What else we have? Next order of business, IB high, 68.2. Well, there you go. This is a good one. 68.2 IB high. Now, 68.2 IB high. And why did I do that? Why did I type the initials? Well, think about the definition of the IB. It will mark the high and low of the current of the RTH auction. So the minute we open the new RTH session, this level is going to leave. It's going to go somewhere else to the top of the current one. Therefore, I put the initials in here so that later down the day, I don't go, what the hell was 68.2 for? What did that represent? And I'll know right away that it was the IB high. IB low is 61.9. That's way below us. I'm going to worry about that later. Overnight low is 49.5. And that's also down below us a bit here. Well, there's 49.5. And the IB low, since we're down here, is 61.9. Well, that's kind of nice. It makes sense at least. All right. That's all the statistics I'm going to do at this point, because that is got the bases covered. Previous high and previous low. Previous high is 56.5. And the previous low is down below us. All right. Let's get here. I try to keep these at a point high and then keep the entire session in view. Let's get to something else here in a minute. The next order of business for me in the day is the TLab snap, which I don't know how much longer I'll continue, because I don't think is very valuable to anybody anymore. But this is a snap that I used to use, that I do every day, of this chart and this configuration of quote page, etc. And the reason for that is the TLab is a bookmap. You see why I don't multitask very well. A bookmap Discord chat room started by a guy named Tom B, who is a professional trader, I believe. He's certainly seems to be a nice guy. And the key parts of this are that it is absolutely free. Now here is what you're looking for. You do have to join the Bookmap Discord site, obviously, and then navigate to the Traders Lab Tom B if you're interested. And if you're not, well, that's okay too. The idea is that early on in that chat room, I realized that a lot of people needed to know levels that they didn't have and were continually asking questions. So I thought this chart would be good, and I've published it every day at about 8:20 for the last couple of years. And every morning around 6-ish, I do the numbers. We're going to open in 8 minutes now, and these dorks are going to keep teasing me up here, and that's going to really irritate the hell out of me. Keep an eye on the overnight or the all-time. Here's I got that wrong. This is not the MCVPOC. This is the MC all-time high. Yesterday I was in a hurry. This was put in yesterday. There's the previous high, and there we are. This was the all-time high in the RTH session. This is the actual all-time high, but put in the ETH session. And I've mentioned multiple times that the RTH guys hate that, and that level will not last. And I predicted by the end of this week, and I don't usually ever predict anything in trading, but I'm going to stick with it. I'm going to say that I thought that they'd taken out last night with NVIDIA, and they may well do so now. This will be the first RTH session since the NVIDIA numbers. What else do I need to do? Oh, yes, I know something pretty important that we probably want to do is be able to trade, yeah? So, with Bookmap, the first thing you need to be able to do is you have to activate the trade control panel and select a method you will use to interact with the application and trade with your mouse. If you choose chart, it's only the chart column, this active data column. If you choose DOM, you can only trade with your mouse in the DOM columns. If you choose both, guess what? You got them both. There you go. Now, in my case, I use multi-brackets. Here's where the risk-neutral methodology comes in. This is the smallest risk-neutral package you can have, because you need to have an even number of contracts. In this case, two size. Then you select a stop size in ticks for the entire package, and you can do that with your risk tolerance for your account, your ATR, volatility, whatever it is you use to determine. The primary directive is your account risk tolerance and your risk parameters associated with your account, because that's your ultimate job, really, is to preserve your account. Anyway, once you've decided the tick size for the entire package, the first take profit target is automatic, because it is for half of the package and for the same number of ticks positively as the stop is negatively. And then you have a runner. Can be four lots, boom. Can be higher volatility, boom. Whatever you want, whatever is correct, optimized for your specific trading setup, that's what you do. One more thing I do is I do this, which, goddamn, it does that every time. That is multi-trade account, and I'll explain what that is and how that works. So now we can trade. We've got a green guy over here. The padlock's open. We're going to do both. I confirm it's my package size. Notice up here that I have the same parameters or data that I have here. And these are both displayed in ticks because I've set them that way. So what I do now, because I don't use any of these bracket tools down here, I use multi-brackets. I can close this, stays green, stays open. I have all the same data here. I have cancel and close all, and I get the real estate back. Boom, there you go. And now we wait patiently for the next 3 minutes and the open. I think we're okie dokie. Here. Seems like I'm always hurrying to the end. I don't know why. I guess I babble too much at the front. I'm like the Brook, huh? You can maybe change my name to Brook because I babble. So we've got 2.5 minutes here now until the open. I suspect that this damn thing will not set normally, so be ready for a flurry of me bitching and moaning. We have our statistics. You understand where they come from. Right here, they are in the market now, well before the open. We have the open type selected. It's still the correct one. These statistics won't change. Now, the POC, the overnight mid, yeah, this is a live market. These levels may change where they are because we're in the live market. I don't think so, because we're so close to the open. But if they did, then I'd have to move the statistics to wherever the flag is. But from this point forward, none of these statistics will change. So they're in here for transparency and accountability. The reason I was, okay, got a minute and a half. The thing about the multi-account is this is a TopStep evaluation account with 4 others behind it. So that any trade I take here automatically copies to those other 4, multiplying the potential, right? And the reason for this is this, my theory was to have a completely transparent and fully accountable documented record from 0 to hero, which I think might be, well, first, it's important for me because this is my trading journal and this is what I'm doing now. And second of all, it might be real interesting for other people to say, well, I don't think you can do that, blah, 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 blah. Here you go. And there's no BS about it. It's completely transparent. No trades are taken off the stream, etc. Now we're getting ready to open here in 3 minutes. 30 minutes, I'm sorry. Seconds, Jesus. I better have another coffee. Okay. I hope everything's working, and it seems to be. Welcome to the stream. we're going to open right on the POC from the looks of it. There we go. There's the open. Yes, the damn thing didn't reset. I'm going to let this go and see how long it takes to reset. Right now we're at 10 seconds. That is so frustrating. And the reason it's frustrating is because the calculations change for the POCs and things, which are important. If we get to a minute without a reset, I have it set to double click for a reset. And of course the schedule was already in place and didn't happen. I'm letting this run so that I can tell the bookmap support, go look at that stream and you'll see exactly what the problem is and why is it happening. There's no, there's not any big ingestion going on. There's no problems that I see. And the damn thing is not, there's 1 minute and it has not reset. Now it's reset because I just double clicked it and you see how far off it is. I'll have to give it a minute now and then cancel the reset, which will throw it back into the scheduled timing, and then it'll calculate the proper. Really annoying. Really annoying. And here we go. Remember what I told you about the overnight volume, the all-time high? Well, here you are. So transparent sometimes, isn't it? There you go. Yeah, now this is the open, supposedly, and we don't have any volume here, so that's not a good sign, is it? Well, we've taken out the previous high, we've taken out the RTH high, and we're a tick below the all-time high. As I mentioned in the stream, we're going to take that out before the week's over because these guys can't stand it. Look at all the layers of liquidity we got flopping in here. Something else I do now every week or every session is put my session marker, which is this blue guy right here. What that represents to me is just a visual clue. So throughout the day, I can glance left, or my peripheral vision even picks it up over here. And if I see that blue line over here, I know I've got the full session inside view of my chart, which is my newer, more recent approach to keeping, because it's very, very important, in my opinion, to keep a real, be really aware of context. Now I'm going to change the charting in IRT to the RTH session or the day session only. And I do that for a reason based around the session prices, specifically the value area high and low, to keep them as expected for the other people that I provide these levels freely and, continually for anybody that wants them. What the hell happened here? I don't want that. Come on, man. I tell you, I thought I had really a smoking hot computer. I build my own computers, and so I bought what I thought was the best when we got here 4 years ago in August of 21 when we moved here to the States. And it's just not working out right. Something's wrong. I believe it's the GPU, but I don't know. Anyway, I've now changed these to the RTH session only. Saved everything. Here, so this is yesterday's RTH, and this is today's RTH. And there we are. And get back over here to bookmap. Okay, so we've traded across this. My workflow here is as follows. I changed when a level has been revisited or is no longer active, I change the text to black. And then on the weekends, typically, unless it's something I want to remember, I take them off the chart. Off the charts. In this level, whether I'm a little tad off down here or not, doesn't matter. As I said, it's just a visual clue for me through the day. And I can't really mark these because they're just trading right back and over and around these levels. Typically, I will show you the minute we get a movement down here somewhere of the POC. And remember, the POC is just the price at which the most contracts have traded. So the minute we trade 70 and 27.86 somewhere down here, this POC is going to move there. That's all there is to it. And down we are to the open. So funny how they do that. I mean, I started talking about the fact that these levels would never hold Monday. And I can prove it. Go listen to the stream. Okay. Well, it looks like the volume profile has got its knickers unknotted here. We've got the IB high at the volume high. We've got the volume area, or the IB low, which is just happens to be behind settlement here, but you can see it over here on the labels. This indicator, which you buy from Bookmap, is kind of handy because it splits off however many labels there are with a bar or pipe or whatever you call it. So they're both in place as far as the volume profile for the day goes so far. So I don't worry about it anymore. It's just frustrating at the open. I could understand it if we had a huge open with a big delays everywhere, but this has not been the case, and therefore irritating. Okay. Is everybody having fun yet? Of course, some internet wizard rearview mirror guy knew very definitely that this was going to be the high here, the IB high, and shorted this, and now they're, got millions of dollars. And it's 10 handles. There's no question about it, but it doesn't qualify for any of the parameters within my trade plan, range requirement, any of that stuff. And at the moment, I am vetting the IB trades. So essentially, I'm only a spectator until 9:30. What is the IB? It's the high and the low of the first 1 hour. Now, the IB high will continue to move up with price. The IB low will continue to move down with price until the first hour, and then they will stop moving and the statistic will become active. We'll talk about that later, but just to let you know. And it's, trading this way, which is, in my opinion, approaching trading as a business, is boring. This is not an adrenaline sport, nor is running any business that I know of. And I've been around a few of them over the course of these many, many years. So that's something that's important to understand, I think. Look at there, boy, they can't get away from these levels, can they? And what was that? That's the value area high from yesterday, from yesterday's RTH session. Looks like it's a little bit off. Now that we have a fairly low range, I can zoom in a bit now, you know, to less. I used to keep it zoomed in like this, which is essentially 75 cents or 3 ticks, where I could see the grid, these grid lines. But I'm thinking I like this better, which is 1 point. Clears up the view. I don't know, just me. Up to you. Remember, this is my trading journal, and I am, by sharing it and streaming it here, anybody can watch and listen over my shoulder and comment. I think you're an idiot. Nice, you know, good idea. You're stupid. Whatever it is, you know. And dialogue, and, you know, obviously this point of this stream is not my way or the highway. Any way that you are able to interact with the market and be consistently profitable is absolutely the best thing for you to do. By all means, don't change it. And you can go one more step and put it, you know, put your methodology into the stream here, into the chat, and so others can benefit from it. Me specifically. Okay. I guess we're off and running here, aren't we? We've been through the open. We traded up. I didn't talk about this because I was hurried in the pre-market, unfortunately, but typically I give my ideas of what I think, or, you know, talk about my ideas of what I'm thinking. I try to talk out or think out loud, right? That's the point of this. What I was thinking about our open trading, which is basically now is, you know, in hindsight, so clear it's rotational. My idea was that we would trade up, and I think I did talk about it with these targets up above us here. And now we're going to pull back a little. I think that unless, you know, one of the random risk band steps up and does something crazy, we'll probably trade right up through, at least through this all-time high, maybe by even no more than a tick or so. Do notice that we have a layer of liquidity here at 65.10, only 94 contracts, and then we got about $1.50 up at 15. So our time frame people are putting in their vote, their opinion. A note about spoofing here. When I mention these liquidities levels, okay? We all know it's against the law. We all know it happens every day, all day, whatever. And how are they ever going to prove it? Anybody, you know, this guy, you're spoofing up here. No, I had an order here and I was thinking that this was going to be it, but I see price, you know, and the market dynamics change and I changed my mind. Come on. But here's something that you need to remember about spoofing that I find important. You and I can't do it unless you're, you know, a Goldman Sachs trader that it finds this stream interesting, which I would be really amazed. Please say something in the chat. This is 146 contracts sitting right here. In order to put that order here, that resting limit order in the book, you have to have an account large enough to trade that order. Now, is your account big enough to trade 145 contracts of the E-mini? Just in notational value, that's millions of dollars. I think the E-mini now, well, it's 65,000 or something, because it's I think around lots of I don't know. I don't want to, I don't think about notational much because of the way I'm trading this, but you know where I'm going. Look it up. In order to put this here, spoof it or not, you've got to have a big enough account size to do that. Same way with 99, same way with 100 down here at this one. And 90s, and up and down you go. Now, sure, these can be more than one actor or more than one trader or company, but still, you have to have a substantial account size in order to put these orders in the book and or i.e. spoof. Well, I don't think that multi-million-dollar high time frame hedge funds or traders I don't think they do things just for the hell of it. Hey, come on, hey, Tom, come over here. Let's jerk these retail guys around. I don't think they do that. I think they put stuff in for a reason, whether it's to, and there's always an ongoing debate about liquidity. And, these resting liquidity numbers in the book, here now we're at $1.29 at 15. Is that a magnet to draw price up to that because that's where they want to trade? Is it are these big numbers down here putting a lid on the pot to push it lower? That's an ongoing, and it's a question that I haven't got a definitive answer for or a feeling about. But the important part of what I'm saying now is this spoofing and these large contract sizes and these large lot sizes have got to be serious traders. It ain't you and me, unless you are trading multi-million-dollar account. And if so, like, subscribe, and send money. There you go. What is going on now? Have I messed something up? Let's just check. Seems like everything's working. Take a run around the horn here. Here is the micro composite. We are just flopping around over the top of this. We're not, there we go. We're flopping. Here's the micro composite VPOC, MCVPOC, and here we are. We haven't taken out the high, or the all-time high, and we haven't gotten down here. This is where we are. Here's our market profile. We're now overlapping higher, looks like. Zooming more into the here and now. This is the RTH session 12 tick Renko, NASDAQ. Here's a real interesting thing we've been watching lately. Okay, look at our ATR. We're way up here at 11. Average true range is 11 points. Would your 3-point stop hold up very good there? Probably not. Here's the one I typically watch through the day is average volume. Right now we're at 96.7% of average volume at this time of day. This is open interest in the SPX and harmonic rotations, which I'm trying to figure out how to use properly so that they would help me with my stop sizing. And then, of course, I do plot the exact setup here for the minis or the micros. And again, I push these levels and, make they're freely available to anybody that wants to use them or could use them. Just put something in the, like, subscribe, and drop something in the chat if you could use those levels for free. We'll hook you up with a link. They push live 24/7 from 1700 Sunday night through 1600 on Friday. These price levels and the tags. If you don't have Bookmap, this is real simple in Bookmap. You just throw this into a cloud note column, and the same exact data pushed from IRT at the exact moment, same time, drives these price lines, which is an indicator that you buy from Bookmap. But the data comes down in a CSV file, so you can use it as an Excel sheet or whatever you wanted to do. How you could apply it to your trading. Okay, we're approaching, rapidly approaching. Oh, looky here. Isn't it cute how I put that IB high in there? And now I know what that 68.2 means. 68.2% of the time we got to this level right here. It looks to me like we're going to do that. And it's also important to notice these are statistics. This is the number, the percentage or the probability of times that we revisited the IB high from the last session. This is 76.8%. Well, in order to get through here to here, you got to get through there, right? So these are not hard and fast lines in the sand. Something's going on, and we are now falling out of bed. We're taking them all out here, already down to the close, which means, and we've dropped under settlement. So now if we look over to the right, and all the Robinhood boys and girls are going to find out that their screens went red. And there's our percent change, and there we go. Red numbers. Wow. The IB low is now down here at the previous close. What else have we just done here? The POC has not migrated, remember. It's somewhere around above 4,000. In order to get that to migrate, we're going to need to build these numbers way up. We're 3,000 short down here. 2,000 short even to get it to settlement. Nothing is mysterious or magical, you know? It's just numbers, data, probabilities. The POC marks the price at which the most contracts have traded so far in the session. What does that mean? Well, that means this is the price where most of the traders thought it was okay to trade. What does that mean to us? Well, that spawns the old acronym, don't diddle in the middle, or the old saying, don't diddle in the middle, because this is the most likely spot to have rotational trade and for you to get stopped out. The least probability of any kind of a directional move in your favor. And of course, remember that this is a random market, and it is a statistical fact that the probability of the next trade is 50-50. What is this? What does price really do? It can only go up or down. That's 50-50. Horizontal movement, we put on it with time. This is nothing more than a coin flip. You need to be aware of that. And if that's not true or you disagree with that, throw something in the chat. Let's talk about it. That'd be great. Well, you notice that the IB low is down here now, isn't it? How'd that work? Well, that's because it's not 9:30 yet, and here we are. I'll be right back. Okay. So apparently the stream is trickling along here. That's a good thing. Be sure you remember, just to reiterate, I don't get monetized for the stream at all. It's my virtual journal. So, likes, thumbs up, subscribe. That's great. And probably as, if not more important than those things is, throw something in the chat and contribute. Trading is a lonesome business, right? It's a solitary thing. So it's nice to have some feedback or discourse with like-minded people, individuals. Well, look at us go. What are we doing over here? Looks to me like we took a little profit and now we're selling down. What do I mean by took a little profit? Well, let's hopefully not break everything here and go back to the overnight. So I was not correct in my assumption there. Here was our open. So overnight inventory was about 95% long, eh? Here's the open. Any inventory traded above that would be considered long inventory. We traded up just a little bit of a skosh, and now we're coming back down towards our previous open. You could think of this as profit taking, or, the market goes up to go down and goes down to go up. That's also a fact. Jack. And now I want to get back here before the value area low and high get all balled up. The reason I'm concerned about the chart story there, the value area, as I mentioned earlier, high represents or is a flag for the previous RTA, previous auction. And all the people that rely on these, it wouldn't matter to me because I know what's going on. I know how I have things set on the other side over there. But for all the people that rely on these levels, they expect this to represent the previous RTH auction. So in order to have that be correct after we open, I need to change my IRT charting to day session only, because if it remained at full session, okay, all night long, this is correct. This is for the previous auction, which is yesterday's RTH. But the moment we open today, this would suddenly represent the overnight, and that would confuse a lot of good people. So that's why I'm conscious of that, and why I, in the spirit of full transparency and accountability, and I try to make sure that everything I do and think is articulated so that it is all recorded and transparent. I'd like to be able to convince everybody that I have need to wear a big pointy hat and have a magic wand, and for those reasons you need to send money. But in all fairness, that isn't the case. This is strictly a business of probabilities, data. Nothing's magic, and that's the truth. I mean, that's actually the Holy Grail is actually how you approach trading as a business and not as a video game or gambling. We'll get to that here in a minute. Now we're rolling into 9 o'clock, which means what? Means the first 30 minutes of the day of the RTH session is rapidly winding down, 30 seconds. So we have another 30 minutes, or if you're a market profile person, another bracket, the next bracket, B bracket actually, before the IB statistic is hot. My what I'm doing now in trying to vet this, and I'll talk about how you do that. And I remember I said, this is my visual clue. I can glance here and know that I've got the whole context of the day going on my screen. So I just monitor that, and after 9:30, when I may anticipate interacting with the market, I can then zoom in and look for my actual triggers and other criteria that would validate that entry. That's the thinking. And if that thinking doesn't sound valid or worthwhile, let me know. And throw a thumbs up, a like, drop something in the chat, more importantly. That would be nice to have some dialogue. Usually it's Richard, Antonio, usually Richard, Alec, sometimes Greg. And I also realize, if you're trading, you need to be focused on your trading, as am I. So there's that. Well, what have we done? Well, we're about 80 to about 05. We're 28 handles wide here. That's pretty good morning. And what would you say the context is at this moment? Well, we're sort of directional because we're not balanced, putting in a bit of a rotation down here. And we're directional which way? Down. And, there's a lot of different ways to look at it. Here you go again. Is this the beginning of a sell the pullbacks? I don't know. That's one of the things that's probably adds to the confusion and the difficulty of trading and the thought behind trading. For every saying which one way or the other, there's one that goes the other way, and they're all valid, and they all need to be bracketed with context. Time frame. Context is time frame, I believe. For example, just look at this area right here. What's the context? Well, it's higher lows and higher highs. Context is up. It's mean reversion around this little rotation right here. What's the context on this one? Well, it's the other way around. It's lower highs and lower lows. What's the context on the session so far? Well, it's down. That's something you need to get your head around, and I think it's important, at least it is for me. You should not be making decisions and analyzing that kind of thing. Oh, here we go. Here we got a VPOC migration there. Finally, I can flag one to show you how that works. You should not be making those decisions or studying or thinking about that during the market hours, during the live session. Those are things to do in your homework. Absolutely, in my opinion, absolutely, and I stick to this. I absolutely do not change my trade plan during the trading session. That's for homework, after hours, weekends, whatever it is. I can now set this to black because we have traded across it, obviously. And here we had a VPOC migration, which is a favorite setup by some folks. And it's a favorite because I think more than anything else, how the hell can you miss it? How can you miss the yellow brick road, right? Come on, man. Don't fight with me. I wish I could set this to stay, but it doesn't do that. How can you miss the migration of this yellow brick road? And the theory behind that VPOC migration setup is what is the volume point of control? It's the price at which the most contracts have traded, right there, 43, 44. Up here it was 40, 60 or whatever, and therefore we migrated down here. That's it. It's just data and math. But what does that say psychologically or in the trading, in the minds of traders? That means that this price is agreed by most now to be tradable or fair value or a place to trade, a place to do business. If it moved from here to here, what does that imply or suggest? On the surface of it, it would suggest that price is being accepted lower. So maybe we're going to go lower. That's the thinking behind the VPOC migration trade. Where I fall down with it, and it is my worst, I think my worst statistic. What you can't miss the setup, but after that, what are the parameters and what's the trigger? That's the key to any of the setups. Most all of the setups are falling off a log simple. The IBs. Well, there's the IB high and there's the IB low. When price comes down through there, that statistic has been taken out, just as has the VPOC moved, migrated lower. But then what do? That's when the rubber meets the road. You got to actually get your head together. No, here's a perfect example. Let's watch this trade. Let's watch this potential trade. VPOC migration. Comes through, comes back up. You could conceivably say that this was a parameter. Here was the trigger, and we got down here. What did we do? So that's 88 to 84. We are scaled. That's the good part. But now what's it doing? Now we're stopped out. So do you wait for the carry through, the pull back into it, and then come down? Do you wait for it to test these levels up here, which are also setups in some of the other places, TLab, whatever, the VWAP mid to VPOC, that's it gets real complicated real quick for me. And I'm trying to be analytical and, measured and disciplined about this stuff lately because I have one trade left of my 2-lot risk neutral setup, methodology, plan, trade setup, whatever you want to call it. And then all 5 of these accounts will be over the profit target and XFAs. And I understand that it would be great to be able to show the dashboard or whatever, but I haven't figured out how to do that without incorporating all this, personal stuff and account number and whatever else that I don't think is a good thing to share openly on the internet. And if anybody knows how to do that, let me know. I'm on the old book TopStep dashboard, not the newfangled thing. I haven't even seen the new one, but maybe it's got some provision for there. I don't know. That's something I need to work out this weekend, and I just have a lot of things in the fire. So we've rounded the horn of 9 o'clock. We're now in the 30 minutes leading up to our IB statistic. And then here we are now, right? Here's mid and all those VWAP and mid things I mentioned a minute ago that is it considered a setup by a lot of people targeting the VPOC, and that's going to work out from the looks of it. That's really not a particularly good, there's not a lot of range or meat on the bone there, in my opinion, because what have you got? You've got 64, oh, wait a minute, 94 to 88. So you've got 6 handles here, which is fine. You've made your scale, right? Because that's 3 points. And you made your scale right there. If you would have. But if this is your target, where are you going after that? If this is the point or the target of the trade, I need 12 points from my entry to achieve both targets, T1 and T2. So I need to think in those terms, because I'm not here to make, you need to be sure you're not, it's not about wins. It's not about ego. It's not about I was right. It's about math, statistics, probabilities, and risk reward. The key word being reward. I'm not here to make scratches. I'm here to make the profit target. That's how you compound your account and stay in the business and become a successful, consistently profitable trader. Have a business you can depend on. Just thinking out loud, remember that. But if you agree, disagree, have other thoughts, throw them in the chat. I don't see any chatting, but that's, sometimes I wonder if it's actually working. I guess I can see here. Yeah, there we go. Okay, no worries. I'm certainly not a professional YouTuber or whatever else, so I'm just kind of learning this as we go. Now here you see, if you would have taken that setup, which is the mid VWAP, and coincidentally they're all in a big pile, so that's kind of nice, and there's liquidity right above it, 128 contracts, 130. You got scaled, but now what? There's a couple ways to look at this, at these levels and this liquidity. Anybody that got short here, where's their stop? Most likely above here, above this liquidity, maybe up above this previous RCVPOC, above the overnight VPOC. You know what I mean? You understand what I mean? I think that's how I look at it. And therefore it makes it tough, because again, it's a coin flip. It's 50-50. Will it go down, take this target out, and after that, then what? Or will they decide that they want to take it back up here and take out all these stops from everybody that's looking short? Now we're having something develop here that I don't like. This big ledge right here. I don't know how to deal with those. I don't know if that is an area of high resistance or support in this case, because the price is coming from the top. Or, as with high liquidity, is that a magnet and we get below it and then we trade down? You would imagine that we've auctioned down this way to nothing. maybe we would want to auction up here and repair this profile and fill this in. I don't know. Just thinking out loud. Easily seen over here. And this is the beginning of what they refer to as a B-shaped, small B-shaped profile, which in market profile terminology is indicative of long liquidation or selling, as opposed to a P-shaped profile, like here, for example, which is indicative of short covering or buying. Makes sense, right? Most of this stuff is that you hear about from the old days, especially, is common sense. I mean, it's just, and when you have the data to look at, it's not like some squiggly line. It's, oh yeah, I see that. You know, don't look at the volume profile here and look at this squiggly line. What the hell's going on? Do you even know? I don't know. But here's what we've done so far today. And now we're at 9:15. The IB statistic is coming into view. And what is the IB statistic, you ask? Well, it is an old, well-known, and I mean really well-known statistic. First of all, to review this definition of the initial balance, there is no statistic until 9:30 because these are just marked the high and low of the first 1 hour. After the first 1 hour, the statistic becomes active. And the statistic says that in all four open types, greater than 97.7% of the days, or the percent of the time, the IB high or the IB low will be exceeded by price at some point in the balance of the RTH trading session. And you can see that statistic, and that I'm not lying to you, right over here in the homework. Statistic study. IB high or IB low. Higher out of range, 97.7. Higher in range, how nice. IRT highlighted that we were correct in our assumption of the open type. 98% IB high or low. Lower in range, 98.3%. Lower outer range, 97.9%. Greater than 97.7% of the time, or the probability, or the instances, or the whatever you want to call them, looking back over 2,000 days, trading days, that statistic was hit. It's always the highest statistic, and typically followed by the overnight low or high. And then we get into the individual ones. Can you trade that? Yeah, you can. But ask yourself this question. This could be taken out in 1 nanosecond after 9:30. It could also be taken out 1 nanosecond before 1600. So it's not exactly a slam dunk. And one thing I will say that's really important from my experience and my data, do not try to trade to the statistic in anticipation of it. What I mean by that would be, assuming we've passed 9:30, the statistic is hot, we're trading where we are right now. We're below the VWAPs and the mids. We're below, let's say we get below the POC. Oh, by God, we're going lower. The context of the day is down, and we're going to take, the IB low is going to be the stat, and you go short, targeting the IB statistic. big mistake. Many, many, many times this happens. And then they go up and do the other side. Just, this is just me talking to me here. Remember that. I'm articulating my thinking in my journal. Very, very hard lesson learned, but definitely, fortunately, I recognized it by looking at the data. I would never take an anticipatory trade towards the IB. Okay, now there is another statistic, lesser, more new, or maybe less understood because it's developed by Rod, who's one of the good traders and statisticians and programmers or developers in the book, in the TLab, and his own application Static, which I'm fortunate enough to be part of. And they refer to that as the IB30 statistic. And what that says is the high or the low of the first 30 minutes of the RTH trading session, which is, in other words, from this line to the left, has a 90-something% probability of being exceeded by price in the second 30 minutes, which is appealing to me in that, okay, there's a time bracket, there's a bracket around it. I don't have to wait for the 1600. I know that statistic is not current anymore after 9:30. I haven't tried to vet that yet, or I'm not looking at trading that, so I'm focusing on my, one more trade out of this thing. And then I will have that vetted pretty much in my mind, or continue to do so. But anyway, that's why I'm holding on and being, as measured and disciplined as I can. But so in other words, here's 9 o'clock. So this was the low, and this was the high. That statistic says that this or this will be exceeded by price before 9:30. Today, very likely the IB30 statistic will not happen. Just looking at it. Is it going to get from here to here or from here to here in the next, next 8 minutes, next 7.5 minutes? It can, certainly. And you would sort of imagine that the IB low would be closer, right? But there you go. So that's the IB30. The statistic that I'm working on vetting is the original IB statistic. And that statistic has two options, and I'll talk about them in a sec. Well, what happened? Let's see now. What do we got going on here? Okay, our POC is at about somewhere around 48 because it's obviously, or 58 because it's between 6 and 7, right? We don't have a single price movement here. These are 1 point increments, not ticks. But what does that say to you? That says that we only need a few more contracts down here to bring the POC lower. About even up here, but it seems that with the price action is trending lower at this moment. The context seems to be down. And remember the level that I was talking about, and I was saying I don't like those, the ledge, and that perhaps we were going to trade over that some to repair that profile a bit. Have a look now. That's what they were doing. That's what, and who's they? I don't know. You know, that's the way market profile people used to trade and talk in the old days. And does anybody give a crap whether this is? I think what they're talking about is they're using an analogy of repair the profile. What that means is that they got orders and this area wasn't properly auctioned. So they're going to auction back and forth up here, making money. And the visual result of that is a repair or a balancing out of the profile, I guess. And I learned about market profile 10 years ago, and the guy that I sort of taught me is dead now, so isn't any going back there. No going back to the source. He was a local bond trader. Yeah. It is funny how this is balancing out, isn't it? I'm not funny, haha, but interesting. Let's put it that way. And here's this VPOC migration. We had one excursion down, this little bit of a guy over here, and now the rest of the trade is above the VPOC here. And we've even moved it up a tick. Do you see this? So, oh yeah. I'm not going to bother putting this migrating VPOC one tick here and underneath of the mid. And here comes 930, boys and girls. Okay, so just quickly make sure I've got my proper package set up for trading. Zoom in a bit to see if it looks like we're getting somewhere. And remember, I am not going to trade in anticipation or, in other words, towards the statistic. I'm going to wait for that statistic to happen. Thank you so much for that, Mr. Bookman. I'm going to wait for that statistic to be in place. And there we are, 9:30 and 45 seconds. So the IB statistic is now in in place. And I'll give a little bit of my thinking around this whole thing. We're vetting these trades and approaching trading as a business, not video game or gambling. It is a business of statistics or probabilities in a random environment. This is a random environment. The probability of the next trade is 50-50. Case closed, statistical fact. Nobody likes it, but that's it. There's probably one of the more famous sayings that people hear, traders hear every day, and nobody pays much attention to, I don't think, because they think it's boilerplate from some legal guy. Past performance is not indicative of future results. That is a statistical law, a fact, very important. So important, in fact, that casinos, who, by the way, our trading model, business model is the same as a casino. They have a term for people who don't believe that statement, and that's called the gambler's fallacy. And it goes like, well, in roulette, okay, God, there's been 10 blacks in a row. The probability of the next number coming up has got to be red. It's got to be over 90%. Absolutely not. It's not based on any of the previous occurrences or trials. It's based on the next one. And if it were only black and red in roulette, the outcome would be just as it is here, which is 50-50, just like a coin toss. In fact, in roulette, both in America and in Europe, they add the zeros, the green zeros. In America, they add a 0 and a double 0, and in Europe, I believe they only add the 0. And that further reduces the 50-50 chance and skews it towards the house. The fact that gambling is the business model of trading, or that trading is the same business model as gambling, is its probabilities. You identify an edge, a setup. In my case, I'm working on the IB trades, of which there are 2. If we're in a directional kind of imbalanced environment, you would expect that once the IB is taken out, we would have a mean reversion, rotational. If it's a directional day, you'd expect an IB continuation. It goes on in the direction of context. What you do then is you capture a data set of that setup and those exact parameters, and you capture a large enough data set to get outside the probability of random occurrence, and you determine the edge mathematically, statistically. You determine the edge or the probability of that setup producing some, the expectancy for you, whatever percentage that is. If it does have one, then your job as a trader is to eat your own dog food and take that trade every time it presents itself in the live market. What do they do in a casino? And I'm talking about the business model from the point of view of the casino, the house, not the gamblers. They don't play any game which they have not pre-identified an edge or expectancy or probability or odds, whatever you want to call it. Then on the casino floor, the only mission they have in life is to play that game as many times as possible. They know there will be gamblers will win. We know we'll take stops. The method is to take as many occurrences of that trade or game as you can, so that the law of large numbers manifests and exponentially increases or compounds that edge to your bank account. when a gambler wins, that, you know, the pit boss doesn't come shoot the dealer and throw all the cards on the floor and change all the rules. They just say, congratulations, Screedle, and, you know, here, get this guy a drink, and then they deal the next hand. And that's the way it needs to be with trading. And this is not something I just dreamed up or came upon in my sleep. This has been recognized as the correct approach for trading by the most successful traders and hedge fund people in the world. Starting with Thorpe back in the old days, Livermore talks about probabilities, Ray Dalio, Paul Tudor Jones, Jim Simmons, the most successful hedge fund manager in the world of all time, still to this day. They realize that it's a business of probabilities and statistics. And to skew those probabilities by identifying an edge and only taking that. It's not gambling. It's not clicking the mouse like you're killing snakes. It's not whipping and spurring or gunslinging. It's a rather boring business of statistics and probabilities. Completely different than the trading that you saw, that, you know, in all the familiar movies about the floor traders and all that. That was screaming and yelling, and those guys didn't know probability from Adam's off ox. What they were doing was exploiting what would be considered an illegal edge today, because they could see paper coming into the pit and they'd front run it, basically. But, you know, neither here nor there. And that's also why a lot of the floor traders were never able to successfully transition upstairs or to the screens, electronic. Because wasn't the way their world worked. You know, the Borsellino boys, those kind of guys, I mean, no way. But this is why I'm doing what I'm doing. So I am betting the IB trade. And the reason I chose the initial balance trades, because there is the IB failure, which is mean reversion, and there's the IB continuation. That gives me a vetted setup for my trade plan, or my, you know, my quiver, my clip, in both kinds of day types. And it's interesting, an interesting fun fact statistic is that the rotational days, balanced rotational auctioning days, are the vast majority of days in a trading year rather than directional. So there you go. Now I'm running into a problem with the range requirement. And let's look at that. Now this is purely hypothetical because we're not near my trade area yet at all. But let's imagine that you were trying to trade an IB trade, or for some reason you had a trade signal here. I would not be able to think about that because I don't have the range. My range requirement is that I have an unobstructed path to my first risk neutral scale. And that means 3 points. Well, there's a 1.5 points, there's a point, there's a 1.5 points, there's 2 points. Nowhere between here and here is there 3 points. And an obstacle is any one of these levels where, you know, some are more important than others, or I have more import than others, that price will react. And look at all the times it's reacted here off value very low. Boom, 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 right? And back up. So you're all excited about this trade lower, and you're going to go down here, and you've gotten hammered how many different times across here and stopped out. And the more, yeah, so these are just all things to have in the front of your mind at all times. And especially be aware of your, you know, FOMO, fear, the desire to be right or to win. Those are all baked in evolutionary things in our brains that's never, our monkey mind, that's never going to go away. You know, that's for sure. You're never going to get over them. You're never going to eliminate them. You're never going to control them. What you're going to do is, in my opinion, the right way to approach it is the following. You recognize that. You recognize when it's FOMO. You recognize if it's a revenge trade thought going through your brain, and you don't act on it. You're an adult. You don't react to those thoughts. You're, disciplined and an adult, and you have a mission, and that's to trade your plan. I also need to be aware, like in my case right now, I need one trade for all 5 of these accounts to, all of a sudden be XFAs. I can get paid. I don't have to pay the fees, all that kind of stuff. Very aware of that, and really conscious of not convincing myself that this is a good idea of a setup. Not anything today whatsoever. I'm talking about previous days and now going forward. Those are all things you've got to be aware of. Well, and along with these lines, along this line of thought, all these guys like Steenbogger and all these people that are making, that are all this conversation about how important, how tough and daunting trader psychology and all that stuff. They're making money selling those books, man. So that needs to be taken into consideration. In my opinion, just like I said a few minutes ago, you're an adult. You don't overtrade. You don't get drunk and put your family in the car and go driving down the street 1,000 miles an hour. You don't go to the bathroom in your pants. You're an adult. You don't overtrade. That's the way I try to look at it. And I think it's the right way myself. Remember, this is my journal, so there you go. And what happened? Well, let's see here. Ooh, VPOC migration, boom, we got scale up. Oh, wait a minute. Now we're trading back up. Are we going to do what Tom would refer to as a price check at L3, which is come back up here to test the open? Likely. Remember how I said oftentimes if you don't trade to the statistic? Well, we're closer now. This is the mid, right? So we are actually closer to the IB high than we are the IB low at this point. Just stuff to keep rolling around in the. I keep running these through my mind, like when you're flying instruments, you have what's called a scan. You scan the the basic T, and that's kind of the same idea with trading. I think approach it however works for you. And there are people that, like I said earlier on, it's not my way or the highway here. If you are successfully profitable, trading, clicking the mouse like you're killing snakes on some platform that has nothing on it except price line, good for you. Don't change whatever you're doing. Doesn't work for me. And that's why the stream is what it is. And it needs to work. Be sure if it does work for you, be sure that you're capturing a long enough, big enough data set so that it is consistently profitable. Because remember, you can have a series of data points or trials within a random distribution. You're not looking for the next trade to be right or to win. Your hopes and dreams as a trader should not remotely be hanging on the next trade. Over the last month or 50 trades or 100 trades, am I within my expectancy? Am I averaging my expectancy? Am I within my statistically proven win rate? And that's another thing I should mention, I guess, is the win rate fallacy. I probably didn't spell that right, but I'll correct it. Win rate is a meaningless internet, YouTube, influencer, scam artist data point that means nothing taken out of context. To determine your expectancy, you have to have a sample of the same setup so that you're comparing apples and apples. And you calculate expectancy based on the following formula: the win rate times average winners minus loss rate times average losers. That gives you an expectancy. Every time I put on this XYZ trade with these specific parameters, I expect to make however many ticks or points it is, whatever you came up with your data. But these guys on the internet, I got a 90% win rate. Yeah. Do this every morning at 6 o'clock or whatever the crap. Complete BS. I can have a 95, 99% win rate and go broke. If my expectancy and my risk to reward ratio is upside down, you're done. You know, you can have, if you make $100 and you lose 1,000, guess what? There you go. There's so much bogus stuff pushed out to influence traders for obviously monetary reasons. You know, they're not making their money typically trading, and maybe they can't. They're making their money on, you know, via YouTube or being paid by Apex or one of those guys. TopStep doesn't do that. That's another one of the reasons that I've always, well, first of all, I started with TopStep originally back in when they first started, and they were the only outfit in town. They were the people that Mike Patak was the guy, and his colleagues there, Hogan, those guys, they're the ones that came up with the whole prop idea. And boy, in the old days, it was something else. You had to pass the combine twice. There was step 1 and step 2. There was scaling, and there was all kinds of things. And there was no such thing as XFAs or where you got paid for trading sim accounts. That's all stuff they've done in competition with all these fly-by-night outfits that have popped up. There was none of that stuff. If you passed both combines and did all that stuff, you got put in a live account, period. Which would be, I think, probably better, actually. I think it was more honest. I mean, think about it. I'm doing this copy thing with 5 accounts simply because somebody who I value their opinion that I was I was an idiot if I didn't. You know, it's an opportunity that's there in front of you, and you're an idiot if you don't do it. Well, what kind of principles is that? Those are false. Because I thought it was, that's crap. Why wouldn't, you know? And the guy said, well, they're going to pay for sim profits in the XFA. Would you like them to, and you make $1,000 on one account, would you like to get paid those $1,000, or would you like to get paid $5,000? Use the sim thing. Now, some of these outfits, like Apex, I think it is, I don't know others, you can have up to like 20 accounts, and they never put anybody. Here's the caveat. With TopStep, you do that one time, and then they're going to put you in a live account, and all this multiple accounts, copy trade, all that crap is gone. Apex, they up front, they're never going to put you in a live account. But you can have up to 20 sim things, whatever they call them. Well, think about it. You know, some of these guys are paying $2,000 a month, and they're what they are doing. What those firms like Apex, for example, and I'm not picking them out. Just the name came to my mind. It starts with A. What they are doing is their business is based on probabilities, just like a casino. They're working on the probability that 95 or 90, whatever it is, % of traders blow up. Simple. And here we are. Look at this. Now, we haven't got to price check at aisle 3 yet, but we're damn sure closer to the IB high than we are the IB low. And I really hope today doesn't turn out to be one of those days like a couple ago where we just flop around. So I'm going to go fill up my thing. If you're ready to trade, get ready, because I'm going to step away for a minute. Something else that's worth mentioning here about this market in this commentary, seasonality wise, these are widely recognized and statistically proven to be the worst 2 weeks of trading in the year, lowest liquidity, directionality, those kind of things, because except for Christmas and New Year, or I guess so it's the second couple. It's, you know, the end of the summer, everybody's winding up vacation, school's starting again, blah, blah, blah. When I first started trading, you had to drive stakes to watch the ES move in the summertime. I mean, if you had a 10-point day, it was a big deal. That's why a lot of people started trading the NQ, actually, in the summers. So there's that. So in other words, this is an extra exercise in discipline and self-control for me because of the urgency and the necessity for this next trade. And I realize you should never hang your hat on the next trade, blah, blah, blah. All the things I said are important, but I'm recognizing my emotional and my other mind here. I have motivation personally and whatnot that I need to get out of this and into the XFAs where I'm able to start withdrawing money, obviously the live account. And so these slow, non-directional or random kind of days require real vigilance. some people just, you know, fold. I mean, they just, oh, the hell with it, I'm going long or whatever. But I'm not going to do that. And let's take a quick zoom around the block here. What do we got? Market profile. Here's our trading day on the higher time frame. This is the micro composite, remember? The E-mini, mini NASDAQ. What's going on with Uncle Volume over here today? Now we're dropping back. Remember we were in the 90s there a few minutes ago? And we were up here at about 11 or so on the ATR. Now we're down to 6. And we dropped back to 89%. This is the percentage of volume compared to average for this time. We're green across the board, 0.03% up on the ES. And what are we doing? Well, we're sneaking back to the open. Price check at aisle 3. Ooh, we're closer to the IB high. And we're almost 30 minutes past the IB statistic going live, right? Aren't you glad you didn't try to trade to the IB statistic right over anywhere along here based on this VPOC migration? And oh boy, we've migrated outside the VWAPs and the mids and all that stuff. I'm telling you. Yeah. Statistics, data, common sense. About all you can say, I think. Following along with the idea about seasonality in the light market and stuff. I need to be ever vigilant, even more so than normal, in that as the consistency of trade and volatility of the market and whatnot decreases, or volatility increases, consistency decreases, I need to restrict my exposure to risk, putting on risk. And the idea there is that whenever you're in a trade, you've put your account at risk to the market. And so you want to be damn sure that your risk reward potential is there. That's why I was talking a few minutes ago. My goal is not to, scratch trade or get my risk neutral. What does that do? Nothing. Pays commissions to somebody, I guess, and makes me feel like a rock star because I'm trading like crazy. But that's not it. It's the key thing is risk reward or reward to risk ratio, however you want to put it. I think I have something about that down here somewhere. Yeah, I do. I forget sometimes what I have in my key. I have hotkeys set up for these different ideas for the timestamps. Yeah, the importance of risk reward is huge. And that's why we trade. Most of us trade the ES is because it is more liquid. Typically, it's a more liquid. Oh, look at here. We got 688 contracts parked out here at 65. It's now 700. Think back to the conversation about being able to spoof, If that's retail, that is one hell of a popular spot for stops. Anyway, what I was getting ready to say about risk reward ratio is what we were talking about just earlier. You want to have you want to plan your entries so that you're in an asymmetric risk to reward environment situation. Meaning, for example, if you went short right here, which would be really stupid in my opinion, because we've already identified all these stops and liquidity living up here. But an asymmetric location is, okay, you can be, you're wrong when it's 2 ticks. And this is a bad example, I'm sorry, because then you have a much greater potential for reward. That's what you want to look for in your setups and your trades and your entries. That should be the ultimate criteria, I think. And that's huge because it allows you to compound. You need to have, in trading with a 1-to-1 risk reward ratio is, just pissing in the wind. You take 2 stops in a row, you got to make 3 positive winning trades in order to get even and up 1. Have a 3-to-1 risk reward ratio in your setup and your bracket, or your trade methodology, and be disciplined about it. You got to take 3 stops to equal 1 winner. That skews the complexity of the business dramatically. That's how you compound your account. Because very definitely you're going to take stops. Once you've identified a setup and it meets the criteria, you put it on knowing full well that it could be one or the other. Unemotional. I'm not there, but that's the idea. Especially at this point in, my life right now, the here and now, I'm not there. I've also noticed another thing which is not good that I could point out, I guess. In vetting these trades, ideally, it's as mechanical as a quant who codes up an algorithm. If this IB statistic is taken, now what's my criteria? We pull back, we come back up, we don't exceed it, and we go short. I have noticed, and that was just an example, certainly not anything to think about And who knows, maybe I just articulated the Holy Grail and don't know it. But anyway, I've noticed in myself now, even vetting these IB trades, which have worked out fine, and I'm up to, as I said, one more of those trades, and all 5 of these accounts are over the milestone. I've noticed that the final decision on entry or pulling that trigger for me is discretionary, which is, I don't think, a good thing, but I don't know how to get around it. I don't know what to do, frankly. I know what logic and books and theory would say, and that is that, well, you need to lower your risk per trade to the fact that it's insignificant enough that you can do that mechanically and rely on compounding, which means in my case here, it would probably be in micros, and I won't live long enough to trade micros to a profit target. I don't think. Maybe people do. I don't know. I'm not. Now, what I have done with this, even in this environment, is when I got down to where my risk to account was such that if you've had a couple of losers in a row or whatever, the first thing anybody will tell you successful is to size down. Well, once you're at a minimum bracket size or trade size of 2 lots, which is what is required for this risk neutral methodology, there's only one way you can size down, and that's to go from minis to micros. I've done that, but it's not very comfortable because you start thinking, Jesus, you go, the difference is 10 to 1. So one mini is $12.50 per tick. One micro is $1.25. So you've got to make 10 times the return on a trade to more or less be even with trading a mini in terms of compounding and profit, which is tough for me. Now, it's a perfect vehicle or instrument to use for, as an example, you can vet a setup. You're risking very little. You can be very mechanical. And once a setup is vetted, once you have the exact criteria and everything worked out specifically, scaling up is easy. You're risking, $1.25 instead of $12. Let's say a point, right? You're risking $5 a point instead of 50. You can take a hell of a lot of samples without any damage to an account to vet that trade. So that's a way to look at that. Okay, what else is going on now? Oh boy, almond joy, huh? Isn't this fun? Is there any, let's take a loop around the horn here and look at our world famous, what's going on over here story. Well, we know that there is nothing, I guess you're aware of the fact, but it's maybe worth pointing out. Earnings are never in the middle of the trading day. And the way whether you can determine with this one, with investing.com, is the little half quarter moon means it's after the trading day, and the little sun icon is before the trading day. And so there's no real, Dell and Marvel and Autodesk, I don't think they're going to shake any, or Ultra Beauty, they're probably not going to rattle any everybody's cage tonight. NVIDIA obviously was the biggie yesterday, and that was the one market's been waiting for a while. We don't have any earth-shaking numbers coming out. We do have the 7-year note auction, and you know, a lot of eyes are on bonds and also Fed speakers. But let's look over here. We've got Blondie Puss talking at 12, so that's never good. Let me point out something about this whole concept I have with what I call random critical risk, or if you're a project manager or anything, any person in any degree with any kind of responsibility or something, you identify any risk to that situation, and then you come up with a risk management or mitigation plan, right? I mean, if you're a homeowner, you make sure you don't have frayed wires that can burn the house down. If you're a project manager, you've made your project plan and your timeline and your Gantt charts, and you've identified the resources required, and you identify what risks might be applicable or could possibly happen to that project from one end to the other. When you get a pilot, you get in an airplane, the first thing you do is make sure you got fuel, right? So that's key, I think. Now, where we are in a unique environment that we're in now with the present administration is twofold, I think. First of all, several of them are really, really fond of the sound of their own voice. Don't seem to have a lot of responsibility in terms of thinking about what they say, and are definitely love the camera. Starting with Trump, with the, you know, with Agent Orange, as Richard calls him. I think that's pretty funny. It's not saying anything political. What I'm saying here is that we don't know at any point what random risk may occur. Now, when we started out the day, this was not there, and neither was this. Since we last looked, and I last pointed it out, I mentioned that the press briefing with What's-a-Bucket was going to be at 12, and now since that time, we've got this executive order signing thing at 14:30, and you know, come on. He's adopted the philosophy that he's going to rule all things America via executive orders and publicize and broadcast every one of them. I don't remember ever seeing any president, and I've been around through a whole bunch of administrations, back to Eisenhower, that have ever done that. Yeah, sign the bill of the some healthcare thing or something like that. Sure, they do. But every day, you know, or 5 times a week or something. And that's, to me, that and others, that is an unknown risk to the market, which we can't mitigate and which can have a similar impact to non-farm payroll or anything else. You know, that's the dangerous part about it. And if you don't believe that, there's the press conference and all the crap about tariffs, which nobody knew about. Boom, drops it in the rose garden. The market fell out of bed. I think the biggest decline in, I don't know how many years, decades or something, you know? So it's a risk that you cannot ignore, I don't think. And that's all I'm saying. a risk you can't ignore. Now, with any number like non-farm payroll or GDP today, or unemployment or whatever else, it's scheduled. It's coming up. You make a conscious decision, and if you are intelligent at all about account preservation, you stay out of it until that volatility is gone, because you can't manage your risk. You can't manage risk when there's a big movement. You can have a stop. The stop turns into a market order the minute price gets there. And when that happens, look at what's going on here. Why? Somebody said something. You can bet your butt somebody said something right there. What time is it? 10:15. Yeah. Also, these stops that we're living up here, that 600 stops got taken out right there. Now they may trade it up and get the IB high. I don't know. But something happened for some reason right there, and continues to go. What I was saying was you can have a stop in, but when price gets to a stop, it changes from a resting order or a limit order to a market order, and that means it'll get filled at the best price it can, and it could be 15 handles lower than where you put the stop in. It could wipe out your entire account, and there's nothing, exactly nothing you can do about it. What you can do about it is recognize that risk in advance, and your mitigation plan is to not have risk on going into that event. There you go. Let's go see if we can figure out what that was. Where my mind has gotten to now is just looking here. Nowadays, rather than looking at this as market, market action or trade related stuff, the minute I see something like this, I immediately look at the news first, and that sucks, but that's how I perceive our environment now. And what have we got? What I'm talking about is right here, right here. Look at this. Look at this volume. All of a sudden, there was some real reason to do that, other than taking out these stops, which was there. I don't know. Maybe that's perfectly valid, but let's look over here. Well, a bunch of stuff about the EU trade. EU presents a lower U.S. tariff proposal to unlock the 15% auto duty. So these guys are bending a knee in a sense, right? Trying to figure out a way to work a deal. And I guess that's a good reason for the market to have a little pop. We got Blondie Puss coming out. It's 2 hours, so it's not anything to worry about. I don't ever listen to any of those speeches, or I know social media or any of that. I figure I see what I can deduce what happened, the message, the theme of those in the price action of the market, and I don't get angry or disturbed or wonder what's happening to my country. Because obviously I've lived out of this country most of my adult life, but I was born and raised here. So I do have an American passport and I'm a citizen. Therefore, it's my country. I'm just hoping I guess it's kind of like a marriage, for better or for worse, right? I don't know. A whole lot of worse lately, in my opinion. I don't know whether I put this graphic up or not. I hope it's still available. I don't think it probably is. But here's one for you. Look at this. Billions of dollars in all these flights every day, deporting people from them, rounding them up and deporting them by ICE. Billions of dollars. And Dodge is going around firing workers to save a couple million. Billions of dollars spent every day doing this. That is an astounding graphic to me. These people are being flown out of the country to random goofy places without any due process, as near as I can tell. It's amazing. It's amazing to me. That's what I mean when I say, what's going on with my country? I don't know. I really don't know. I don't think it's good, but, reminds me of, similar activity in the late 30s in northern Germany or northern Europe. If you know what I mean. They're going around at night and rounding up people and putting them in mass transportation. In those days, it was freight cars. Nowadays, it's airplanes. Moving them to other countries and putting them in camps. It didn't work out well for anybody. And that's a real interesting thing that I never really gave a lot of thought to. That did not work out well for anybody. The people doing it, the people it was done to, cost millions and billions of dollars to the rest of the world to rebuild the mess from World War II. How that whole thing is being repeated now is pretty crazy. I think that's what it's right. I think I'm right. I think that's a correct assessment. And what's happened now? Baby, 8,077 and 8,100. So 32 contracts and boom, comes the VPOC. Right to settlement. Isn't that cute? You see that none of this stuff is mysterious or magical. It is just math and probabilities and, data points. And I'm not, God, it's already 10:25. Here's a fun fact. Let's stop thinking about why I can't stand. I don't ever look at the news or anything during the day. I read Financial Times and Wall Street Journal and sometimes Bloomberg, but I don't really look at the rest of it. It just irritates me. BBC can be okay, but typically they're focused on everything going on over here. So anyway, back to the point at hand. Here's a fun fact about the statistics, which we've talked about a lot. Higher out of range, the IB statistic. We already know that one. 97.7% today, in fact, in this open type is 98%. The probability of both the IB high and low is 31.9%. So that means that there's a 31.9% chance we'll hit this one and this one. What does that mean? And the fact that it's a 98% probability that we'll take one or the other. That means that statistically there is a 2% probability that we will take neither IB high or low. 2%. I don't think that's remotely tradable in the middle of the day. But if this were 230-ish and we're trading down here someplace, it's a reasonable, could be a reasonable trade methodology to put on a trade targeting the nearest IB. You know, in recent context, you'd have to work out the parameters of it, but 2%, think about that. That is without a doubt one of the most prominent statistics that we have in the day. And I guess if you took a loss with a 2% probability, other way around, 98% probability that one or the other would get taken out, that's pretty good. Huh? You know, you just have to accept that. But that's something to look at, think about. And what are we doing? Well, we're just rotating. And a nearly a perfect profile, I might add. Got a little bit of a bump down here where we had that shelf that's now being marginalized or evened out, but you know, pretty Gaussian balanced distribution with a bit of a little appears to have a little more taper at the top than the a little more of a excess or taper at the bottom than the top. Over here, similar. Neither a poor or weak high or low. There's, I think I don't know whether Dalton's definitions are as per Stottlemyre or whether he just. I think a lot of what Jim does is, you know, if he says stuff, he's like a couple other people who come to mind. If you say something enough times, it becomes the truth or a fact. But anyway, in any case, minimum of 2 TPOs, in his opinion, qualifies as excess, and we have that on both. If you have one, I believe it's considered a poor or weak, high or low, and if you have no excess, in other words, 2 TPOs together right at the top, that's a poor, high or low. I think that's how he did it. I forget. It's been years since I learned anything from Jim Dalton personally, live, you know. One thing's for sure, if you are not vetting a trade as I am, and you have a statistically bona fide mean reversion methodology, you're probably doing really good today. You know, there's outside, not really the outside in. Outside is up here. And that's where you have to be careful. But what are we talking about here? When it's 64 to, wait, there's 20 handles, or 10, 15 handles from here to here. Certainly within my profit target on the 2-lot package that I have on now, but it doesn't qualify in any of the other stuff. It's not an IB trade, so it's off the question. There is, what are we, 4 to 1? Okay, so there's the risk neutral. No, yeah. There would be our risk neutral scale. Targeting what? All of this noise here? Here? I don't think so. For me, those, it's just not high enough probability, and I realize that there's nothing sure about trading and that you're going to take stops and should never be hanging your hat on the next trade and all those things. Boy, it seems longer than 2 hours, doesn't it? We've only been streaming for 2 hours here. It's only 10:30. My. My. Now we're going to be into RTH2 here pretty quick. 10:45 is, I think, where Rod flips it around. Basically, take the number of minutes in the RTH session, however you want to define that, whether it's 8:30 to 1600, which is the complete session, or the cash session, which is, 8:30 to 1500, or technically including the curb trade 1515, and then divided by 3, and you get RTH 1, 2, and 3. Kind of just a way of higher level way of grouping the day, so that you can try to understand, are my successful trades? Do I make more money in the RTH 1? Do I make second amount of, profitability in RTH 3 or RTH 2, or is RTH, maybe I best just stay away from RTH 2. When I first started this, my original journal, which I still have, I haven't kept it up for a while now since static, but used to upload to it every night, every day at the end of the session. It would break down in hours of the day and days of the week. Oh, never trade on Wednesday between 10 and 11, for example. You've had X amount of losers there. I think that's probably way too granular, maybe not, because the thing that you need to do or be aware of is to have a large data set to be outside the random distribution, which I've talked about ad nauseum for vetting the trades and everything else, but it's the truth. Flip a coin. We all know a coin is 50-50. Flip a coin 10 times. It's not surprising to anybody that you might have, 6, 7, 8 heads in a row, or all heads, and that's called, because that is within a random distribution. It doesn't invalidate the statistic or the probability of the coin flip being 50-50, but it's within a random distribution. And that's where strings of losses, or, I'm in a drawdown and all that kind of stuff you hear about, that's what that is. So, you flip that same coin 1,000 times and you're much closer to your 50-50. That's why you should never hang your hat on the next trade. Why you should always look back at your performance over a wide enough data set to, I'm still within my expectancy, and my win rate at whatever it is, 47, 49, 65, whatever the hell it is, and I'm within that probability still, so everything's okay, no change. Look at this crap. And I don't know what they're waiting for. Nothing, I guess. There's no numbers. There's no reports. There's, what's her bucket? Levitt, I think. Is a press conference at 12. That's at noon. Those aren't typically earth-shaking whatsoever. Right here. Pending home sales was down. Well, that's not a surprise. Down a lot. That's not a surprise. The bond auction now might be important. Agent Orange signing stuff at 14:30. That's not doing much to us now. I don't know. I guess I guess they're running out of news, so they want to be sure and put this ad up every time they don't have enough stuff to push in there, I guess. That's pretty funny. Yeah. Anyway, there you go. There you have it. Boom, 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 boom. Now, this is something that's interesting to notice. Harder over here on Bookmap, and why I try to keep why I think it's important to keep the whole range in view. Still a little harder to visualize here, I think. And it's pretty much impossible to visualize on the volume profile, but just look at the Renko charts. What's going on here? We've got lower highs and higher lows. That's not good. That's coiling up. That's the megaphone story happening there, right? If you were to draw a line here, you got a line going down like that, and you got a line coming up like that. I'm not saying I have any idea what's going to happen, but typically when you wind up a spring, something goes pop at some point. And that's kind of the way to look at that, I think. I think that's the way most people do, or kind of the accepted chartists' way of looking at them. If you got to now be real careful with Bookmap. If you've selected this data column over here to trade, see how it turns into a dollar sign instead of an arrow? Accidentally click over here, you got a trade on you didn't plan for. I've done that, trying to do this exact thing, trying to draw a trend line and then adjust it, and all of a sudden, boom. More than once, and so now that I'm converting to trying to use the mouse only rather than hotkeys to trade, because I believe it's more accurate and faster, I have in my trade plan, and it's now in my brain, the split second I am in a trade I didn't plan on, I am hitting this thing as fast as I can go. The last time that happened, the trade went on to both targets. Had I not been wired up to do that, I got out scratch. I got out without it costing me a penny, or the unfortunate part, or making a penny. But you can't rely on that, right? And one of the dangerous parts about our psychology is an error working out. That's really, really dangerous. Because human nature is we remember the good stuff and we don't remember the bad stuff or the painful stuff or the whatever. If that would have happened, or if I'd have fat keyed, or if I'd have made a random while I'm going long here and it worked out, I'd remember doing it. Well, the best is moving your stop. You put on your bracket. Your rule says you very definitely never widen out your stop away from entry, and it trades up towards your stop, and you move it 3 more points away from your entry, and the market turns around and goes back to your risk neutral scale and maybe even your profit. Boy, you will remember moving that stop working out good for you till your dying day. But all the different times that you moved that stop and it ended up costing you twice as much, boop, you forgot about all of it. And that's why reviewing and judging and analyzing your trading based on statistics that you can see in front of you is so important. They continue to get tighter and tighter over here. Back to the, being real vigilant about errors that work out and how deleterious they can be to your trading. I'm no shrink, right, or anything else, but I've heard quoted more than once that is very definitely a human trait for all of us, to do with any kind of pain. And in the case of trading, losing money is taking stops is essentially equates to a in our brain, our monkey mind, pain. I've heard quoted that if women remembered the pain of childbirth, humans would have lasted about one generation, and they don't. And then all the joy of having a child and all those kind of things, which is very, very true, takes precedence. So it's a mechanism that we have to remember the good and not remember the bad or the painful as much. To highlight it, I don't know the right way to say that exactly. And as I said, I'm not a shrink. I only went 1.5 miles to school, so. And it was uphill both ways, of course. But I'm not sure whether that's true, but it makes sense. I mean, kind of to me. So here we go. Here we are. Yeah, this is about as I don't know. We could go outside and watch the grass grow, I guess. It'd kind of be the same idea. Oh, yeah. Well, little pop up. Boop, 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 boop. Even if you look over here, you can sort of see that same price action in that we got the buying tail and the selling tail, and it's just narrowing down. Oop, wrong. Up here, sorry about that. Buying tail. The minute I saw this POC, I'm going, wait a minute, what happened? Buying tail, selling tail, and we're just closing in on a doji or whatever you call them, which is an indication of complete indecision and no real consensus on what the hell to do next. As if the market's waiting for something, you would think. When this kind of thing happens during a day, normally there's going to be a big report or something coming out, usually. Higher lows. Higher lows and lower highs. Easier seen on the Renko here than on the book map necessarily, but it's pretty obvious. And they're building this profile out and this distribution. We could just end up the whole damn day. I don't remember. Let me think about this before I say it. I don't remember a day in which we did not take the IB higher low. And I'm sure I've seen one. You can't stand here for years at a time, every day for years and not, but I can't just go, oh yeah, Thursday of the blah, blah, blah did that, like some people do and know that day. I wish I was good with a backtesting coding kind of environment that I could do what if stuff like that. How many days did we trade the RTH session without and not take out the IB higher low, not take out the higher low with the first 1 hour, something like that, and then just instantly get a statistic? I really envy people that can do that. my back testing is I tried getting up to speed with Python and using backtest.py and those kinds of programs that are free. Only to discover after I had spent a lot of time, did have it where I had the bracket. I approached that like I do my IRT. I set up the entire bracket system in trade management, 2 lots, contract, scale, risk neutral, all that stuff, stop. I got all that figured out and working fine. And then the next block you do, or I do, is the entry types. IBC, IBF, whatever, the setups. Only to find out that I was getting all these really random numbers in the display in the output displays, which are kind of nice. There's a different table of statistics and a graph with the different trades plotted on it and this and that and the other thing. To find out that those are built by and built for dollars or crypto, and they don't work with futures because they don't trade points and ticks. They don't think in points of ticks. And I actually went to GitHub and pinged the guy who built, the developer who built backtest.py, and he said, nope, doesn't work. I'm not even thinking about that anymore. I'm just off doing something else. There are platforms like Quant Connect built around putting in your script and futures, but I didn't get there. I got limited success, and I'm more. I guess it's easier for me. I guess probably because I'm lazy and old, but using IRT. Yeah. So I'm only in this one. There's apparently some change in the algorithm. I don't know. Somebody mentioned. So here we go. Welcome to the stream, Risk Neutral Futures Trading. Of course, it's every day from 8 o'clock in the morning when I do the pre-market and all those things. And then the stream goes through the complete day of the cash till a little after 3. Yesterday, I let it run through the NVIDIA numbers just to see and have that captured. I'm not monetized in any way, so I'm in it for the subs and likes and comments in the chat. That would be great. And if these price levels could be a benefit, let me know. Drop something in the chats, like, subscribe, drop something in the chat, and I'll hook you up with these levels free. I've been going for years. I've been pushing these for years, and a lot of people use them. So there you go. It's my journal, so I'm basically talking to myself to give insight as to what I'm thinking at the time that I'm watching the market, which is captured on the video. And my intention here is to be completely transparent and accountable. No trades off the stream at all, period, case closed, and record the journey from zero to hero. And my thinking about that. One of the things I do just platform-wise, my idea here with the setup I have in Bookmap is that all the data that I think is important to make a trade decision is here on the right-hand edge of the trade, right? I've got the DOM, my columns, my high time frame column, and the volume nodes and the 2 volume profiles. Most important, or all important notes column here. And I don't want to do that. Why is that doing that? I know what I did wrong. I did the wrong thing. Come on. There we go. God, Jesus. Come on, Alice. Come on. So that's how that works. I try to keep all the data that might be important for a trade over here on the hard right edge. Not much more to say. It's been a long, slow grind these past couple of weeks. Finally got all the drama straightened out with the account on Monday or Tuesday, and I'm one more 2-lot T1, T2 trade away from all 5 of these accounts going to the next level. And that would be great. But I am very aware of that and aware of the pressure that puts on my brain and my decision-making capability or decision-making process. And it's really important. It's no more important. Being aware of your FOMO and all those things and your monkey mind is no more important or less important than did you get a good rest? Are you well hydrated? Did you have a fight with your significant other or whatever? Anything that puts you mentally or physically on tilt is a real important. Recognizing that is really important to just push the mouse aside and wait till you've got, all the adrenaline's out of your, depending on what it is, all the adrenaline's gone or, you've identified. And like I said, you're never going to get rid of any of that stuff or control it or eliminate it is a better way to put it. But what you're going to do is recognize it and, be an adult. Don't act on it. That's what I think. And there's something else that's important is the market is a continual stream of opportunities. The joke over in the TLab is, well, I missed that one. I'm waiting for the next bus, and that's kind of the way to look at it. That's not the only opportunity that's ever going to happen in the market. The one you just missed is not the only opportunity that's ever going to happen in the market. I heard somebody else that had a good saying is, there are no such thing as missed opportunities. There is only the next one in trading. And I like that one a lot. It's the truth. There's no reason to be FOMO or revenge. There's no reason for that. There's just the next opportunity. Be focused on making sure your setup and everything's correct for that one, not the one that got away. Boy, Jesus, look at it now. If and when there's something happens, some catalyst, it'll be epic, I guess. I don't know. Look at this, Boom, 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 boom. I got no idea why, what, who, what, who's on third. I don't know who's on first, however it goes, Maybe everybody knows something I don't. And I'm not really joking about that as much as I am, boom, boom. And I am continually looking at the news and wondering if there's something that I'm missing here. Nothing planned. This drama with the Fed Governor Cook, some of the, what I would consider to be unprofessional comments and things that are being made by the cabinet members is phenomenal to me. You'd expect that at the bar, you know, not from highest, don't, you know, never, let's not forget, extremely highly paid people running the government at the inner core of the government. You wouldn't, you know, they're supposed to be the people that understand there's due process in your, you know, Bill of Rights and the Constitution. You're not guilty until proven, you know, you're innocent until proven guilty and all that stuff. And these guys are firing off like, yeah, well, you know, guilty ones always complain about that, blah, blah, blah. It's obvious to me. Guilt is obvious to me or something like that. Really? And you're a cabinet member? Wow. Shocking. I don't see anything. CHIPS Act. At the Deutsche Bank conference, but that's, as I was talking about earlier, that's kind of the hallmark of the new reality, is to have, you know, government by social media kind of. I guess it's not funny, but it is kind of, you know. It was always a big thing about, you know, it's real dangerous to try the case in the media. That was on a different level, you know, with a criminal case or something, and all the media in a town or a city would get all spooled up. We're talking about cabinet members here, national security things, and the Fed, and Jesus. Never in the history of 250 years have these kind of things happened. I don't know what to think. I do know I'm getting kind of hungry over here, and it's 11 o'clock. My stomach thinks my throat's been cut. And I don't know what to say. You know, I'm just kind of talking to hear my head rattle, I think, because there's not much going on and not much to say. So I'm going to stop doing that. Oh, I know one thing I forgot to do. The football. Speaking of that, I forgot to slap on the Mookie. I forgot the Mookie. There you go. I don't have a monitor in here for this music. I need to put on my headset if I were to do so. If it's too loud, too soft, no good, let me know in the chat. I don't know that anybody's, haven't had any input. Richard and Antonio, typical, always here, don't seem to be in. So that's, hopefully they found something much more meaningful to do than watch this all day. I would hope. Once ora, 11 o'clock, huh? Wow. This one, I think it's in Olds. That's it in first. Look at this. Be sure I'm charting all of this properly. It's pretty amazing. Look at our little doji showing up over here. What would it take to bust this market loose? Well, obviously, some random something or another from the Agent Orange and the Random Risk Band, I guess, you know, taking the stage and doing something crazy. Or declare war on North Dakota or something. I don't know. I'm glad we showed those pesky penguins who's boss and put a big tariff on those islands there. That's important. Boy. It's interesting that those kinds of things that really happened, of course, in the Liberation Day, or, you know, Concentration Day, or whatever he called that, when they had the big Rose Garden thing about all the tariffs. They implied like 35% tariffs on 2 islands whose names I forgot, only inhabited by penguins, subarctic islands. Okay, and the fact that it was proven, recognized and then proven, that the data of, you know, other people's tariffs against us and all that stuff was completely fake. What had really happened was they had just looked at the import-export percentage and then called it something else. Most surprising to me at this point, you know, looking back on all of this stuff, is that nobody makes any excuses or apologizes for a screw up or anything like that. Nobody says, yeah, that was pretty, you know, well, pretty crazy to put a tariff on islands full of penguins. They don't even acknowledge it. It's like they rely so heavily on the short news cycle and the fact that the specific, you know, I hesitate to call them news place channels, will do whatever they're asked or told, and then they don't even, it's not even a thing. They don't even, doesn't seem to bother anybody. I find it really weird. But nobody cares what I find or think, so there you go, except me, I guess. And this is just as much fun as I'm going to see if I can go chase one of the cats or corner mama in the corner, get a kiss off of mama or something. I hear her cooking out there, so that's starting to bother me a lot. If I had something fun to go do or something like that, I would, and I didn't have the responsibility of the stream, this would be a good period of time to just knock off and go fishing or to the beach or something. Like I alluded to earlier about risk, you know, when you're in an environment like this, the best thing to do for your account preservation, which is your first prime directive as a trader, is to maintain your account, you know, preserve your account. When you're in this kind of an environment, the best thing to do is just step away, go do something, a better use of your time, frankly. I'm OCD enough that when I make a commitment to do something like this, I will continue to do that. Or I have a work ethic, or whatever you want to call it. I grew up working from can to can't and thinking that was important. And in reality, it's important to do something there. What am I going to start tapping the wrong spot? Never mind, hold on. depending on, how old you are, where you grew up, whatever else it is, most people, myself definitely included, you grow up thinking that your effort, your reward is somewhat tied to or attributable to your effort. Another way they talked about it a lot is over here is work ethic. You have a strong work ethic. I grew up on a cattle and horse ranch in Montana. 3 of us, Mom, Dad, and me, ran the ranch. And boy, you talk about working can to can, 7 days, year in, year out. That was it. And so the success of that, your life and everything else, is tied directly to your effort. And that is absolutely not the case with trading. The more you click that mouse and expose yourself to the risk, put your account at risk, it's a direct relationship, right? The risk goes up. And it doesn't mean that your reward is going to go up. Much better philosophy to identify statistically A+ setups and trades that have a proven statistical edge to be the most rewarding are the ones to take. And if that's one a week, that's what you do. I'm vetting these trades, and I am just gotten through with this drama on the account. I haven't taken a trade in a couple of weeks because of that. And I am also a bit suffer a bit from paralysis by analysis. But I'm trying to be real methodical about finishing this vetting process, and I've mentioned a number of times where I am with these accounts, which I wish I didn't know. I never look at my P&L. I never go to those dashboards. I had to, in order, when this drama happened where the accounts weren't showing up to pulling through on Rhythmic, I had to go figure out what was going on, and was surprised to find out that I'm conservatively, not even full profit target on my 2-lot package, but less than that. And all 5 of those trades will be over the milestone into the XFA deal. Wish I didn't know that, because that's in my mind. And I want to be really aware that that is not a motivation, because it's so easy to bullshit yourself. But very definitely, Rod is a great example of a lot of things, but in this case, professional, successfully trading, because he shares his stuff, shares his trades, shares his stats, because we're all in the static thing, which is his app. He worked out that he has been trading the risk neutral methodology for 4 years, I guess. And about, a couple of 3-4 months ago, he determined, after having done that successfully, profitably, consistently for years now, and built up obviously a good big cushion in his account, he determined that rather than, it got to kind of annoying him, that if you realize with the risk neutral package, you're cutting your potential profit by half, in that the minute you get to your risk neutral scale, you take that off, and now your trade is right and free, but the potential profit is also halved. So he determined that he was capable of recognizing and taking only A+ trades, and moved from the risk neutral methodology to having both lots, or the whole package of lots at at different targets rather than risk neutral scale. And his trades, one of the benefits of that he recognized was that his trade frequency dropped way back, and it's paying out. So that's the next step in my journey, but I got to get, crawl before you walk, or however that goes. And another way that maybe would have been a better example with some of the other traders, Rod in particular, is scaling up, right? So you get very proficient and absolutely understand your setup, your parameters, your trigger, and you capture a out of random distribution data set, which gives you a true statistic or edge, or expectancy is the best word for that setup, with a 2-lot risk neutral package. Then you can easily go to 4 lots. Or, and as your account, you have to always maintain, of course, the correct relationship with risk to your account. And that's 100% based on your personal environment and everything else. If you're doing the prop thing like I am, it's fixed, right? Your account doesn't ever get any bigger until you get into the XFA or then your live account, and then it's normal. But in this instance, in the XFA, your account doesn't get really any bigger. If you've got because you have things like daily loss limit and maximum drawdown and that kind of thing. Then after you finally get to a point where in the XFA, then they haven't pulled you into the live account yet, or in the live account, you build that account up to $20,000. That's your drawdown. I hear the call from the boss. I got to go check this out, and I'm hoping it involves food. Keep your powder dry.
Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o seu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor, deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Pra fazer o frio evaporar. Pra fazer o frio evaporar.
Well, and there we go. The minute I step away, of course, there goes the new all-time high, and why? Yeah. This doesn't make any sense. Why is this doing this? Yeah, well, okay, cool. The length of time it took me to eat a bowl of homemade taro curry and eat a piece of homemade sourdough bread, fresh. This is what we get. after all morning of Megaphoneville. No way to do that I can see. We've just taken out our IB high now, of course. Look at all the liquidity stacked up in here, and look at all the levels and how they're piled up. There's nothing there that would suggest to me a IB failure trade, even though the market is absolutely balanced, and that would be what's suggested by the profile. I think this is a classic example of what I was talking about earlier at some point. Around seasonality in the light trading environment. You can have one of two things. You can have just a boring, like a couple, 3 days ago when nothing happens. Or the alternative is takes very little to move the market a long way because it's such light liquidity. And let's look at what happened. Who said what? Judge sets a hearing for Cook. Humpty Dumpty is going to have her thing at 12, so that's not a deal. Well, Zuckerberg met with Trump at the White House last week and lobbied Trump on digital taxes before the tariff threat. I can't imagine. I can't imagine that did anything. 30-year fixed rate mortgages are down to 6.56% August 28th week, lowest since October 24th. Down from 8.58. Geez, I didn't realize it was up so high. Freddie Mac. No idea what. Now here we go. So you see, the IB failure. Not something in my world because of the wonderful things it does. What have we got here? Let's see, 8 to 7. Well, to 6, that's 2. And here's another 2. There you go. Well, here we are, eh? Ridiculous. All-time highs. I think that this market is setting up for the mother of all. I don't know what it is. Mother of all. I was going to say pullbacks, dumps, recessions, whatever you want to call it, but I don't know. We'll put this in here for the MCAT high. What's the day? The 280825. Well, there you go. So you see, I'm a fortune teller. I said that we were going to take that out at the end of the week, and there you go. We did this morning. So, there you have it. And with that, and $5, you can get yourself a Starbucks. Yeah, okay. I don't see anything. I don't see any news worth worrying about. I certainly don't see any market worth worrying about, except that our 98% probability for the initial balance statistic has once again been satisfied. A lot to be said for statistics, eh, boys and girls? Yeah, it sucks. I could stand here for 3 weeks and this would happen, and I go have a bowl of soup and a piece of homemade bread, and in less than 30 minutes. And bam. Now, that is just one exact price. Look at there, 1,555 contracts right there. All those stops living right up there above the all-time high. All that fuel. One bar. Boop, boop. And then down we come. I can't and damn more not. Couldn't trade that. The IB continuation is not suggested by the basic price of the day. Well, I guess it is kind of in a way. Basically, we're rotational now, huh? Is that right? But as I pointed out earlier, right after this pop, there was no meat on the bone here. In other words, my assessment of the probability for putting on a risk is not good enough. And maybe this is strictly my problem. I want to forget my vitamins. Run faster and jump higher and all that stuff. FOMO country here, boys and girls, not me at all. To be honest about it. I've pretty much written this story off today. In exasperation and frustration. Well, they got the volume back up a little bit on that last bump. For whatever reason. And that's kind of the problem, isn't it? If I don't know the reason or understand why, then I'm just guessing and gambling, and that's doesn't have a long-term, it doesn't have a high probability of success long-term. And I realize there's a whole bunch of people that, he makes hundreds of thousands of dollars going to Vegas, playing poker and whatever the hell else it is. That's not my world. They're going to keep fluffing around up here now for whatever reason. I think that I'm going to just head into my midday break here. They've got the IB stat out of the way. I'm not going to get involved with this at this point because I think it's too light a market and I have no idea why they're doing what they're doing. We've got press deal up at noon, an auction, bond auction at noon, or note auction at noon. Agent Orange is up at 2 or 2:30. Yeah. I'm going to make sure the music's going for you. I'll leave it on the book map as usual. Nothing here for me to have done, and I don't feel bad about it at all. No missed opportunities, only the next one. And this was not a missed opportunity, unless you wanted to really squint your eyes and say it's an IB failure opportunity missed because of this bar here taking out all those stops above the all-time high made in the ETH session, which I mentioned way early this morning in the pre-market was going to fall, my prediction this week, because these guys, wherever they went, these guys can't stand to have this happen by the ETHs. And we took out this high yesterday to here, and now we've taken out this all-time high, and that rests back in the possession of the regular trading hours, folks. And there we are. And here we are trading, just fluffing back and forth around the IB, which is the only trade I'm taking. I'm betting the IB statistics trades, and that's all I'm looking at. So, you know. There you go.
pienso en qué pasó y cómo me afectó las horas que pasé en aquel bus. No entiendo bien por qué mi abuelo distraído se bajó sin mí. Yo seguí. Acapulco no era un lugar para una niña de mi edad. Con solo 4 años enfrenté la soledad. Del bus te vi pasar y la calle caminar, y a pesar del miedo que me dio, no pude ni llorar. Eres la niña perdida, el chico me preguntó. No había entendido que esa niña era yo. Después de 6 horas encontré donde bajar, crucé la calle, di con el lugar, se abrió la puerta y todo mi mundo me abrazó. Estaba sola frente al mar. Nunca me voy a olvidar. Estaba sola frente al mar. Acapulco era el lugar.
Estava a viver, caminhando na vida, sempre chorando por uma nova ferida. Mas como até que de um mato nasce uma flor, muitas vezes é da dor que vem o amor. Eu que pensava que era um engano, olho seus olhos de luz e vejo um anjo. Esqueci dos tropeços, esqueci das caídas em noites perdidas.
Well, this is very definitely not fitting my qualification for an IB setup. This good to be now that I just this second walked in here. IB statistic. Pull back, straight up, come down, up to the IB. That could technically have qualify for an IB failure setup or trigger. Let's just imagine if we got short at 8. Now we're at 2.5. We need to get down to 5-ish to have our scale, which would be right here. To have our risk neutral scale. And I have no clue in a million years why they're thinking about going that way. I might need to think about defining rotational versus directional in terms of statistics or points maybe, because on the looking here on the market or on the book map, this looks fairly directional, right? There's 1, 2, 3, 4, 5, 6, 7, 8, 9 rotations basically. That would indicate a preference for IB continuation. But over here, if you look at the way this profile looks and the context of the Renkos, it's pretty much rotational. I don't know. These are thoughts I have to have. Conversations I have to have with myself. Now we've gotten we would have had our scale out for the IB failure trade. Our scale would have been at 5. So had we taken this trigger, we're scaled at 5. I did not absolutely do that. This is rear view mirror analysis, not suggesting that I took this trade or calling it or anything else. I'm trying to analyze price action to, try to get my head around it for next time. Where did we go? Right down to this levels of support. And so we plowed right into this support level here. And now what are we going to do? Right at that developing value area high. And the previous value area high, that's interesting. Developing value area high. Value area high. Oh no. Blondie has taken the stage. Okay. Well, in that case, I am going to take a nap. Oh yeah, this is not my day here. No errors. Patience. Took the statistic while I had stepped away for a quick soup. And now we're doing this. Come down to our resistance, developing value areas, and bounce. I don't know what to say. What to do.
Cada día por amor, corazón, todo lo que viví fue para prepararme y reconocer tu amor, amor. Sientas dolor, quiero acompañarte hasta que te salga el sol, besar todas tus lágrimas y darte todo mi amor. Salga el sol, besar todas tus lágrimas y darte todo mi amor.
flor querida, la noche ha llegado acá y en tu vida puedes dejar la soledad, siempre contigo ella está. Si duérmete, mi angelito, sueña con tranquilidad. Duérmete, pronto los sueños llegarán. Contigo ella siempre está. Llegó la estrella, llegó para ayudarte a dormir. Y sabes que con ella nunca tiene que sufrir y con amor puedes vivir. Si duérmete, mi angelito, sueña con tranquilidad. Duérmete, pronto los sueños llegarán. Contigo ella siempre está. Contigo
chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. Chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. Que soltarmos que nos foi presenteado, esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão.
Salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Nuestro universo todo era posible. Cantamos, reímos
So I see oh, good. Well, they're getting it up there anyway. Good for them. I mean, why? For what reason? Ah, yeah, I don't know. It's certainly not something that I would do. I guess you could say hindsight, rearview mirror. Here was the case that I talked about before I went outside. Didn't get anywhere. The IB continuation down to here. This is all rearview mirror trading, of course. And we're 5 handles higher. So I don't search the hell out of me. Now maybe they'll continue to pop it up to these levels up here around 22 where we got about 200 contracts trading. I don't know. I got no idea. Clearly, the IB continuation is working out. Well, I wouldn't say clearly. It's only 5 points, but, you know. I guess, I don't know. So, yeah. A good opportunity to become aware of any kind of FOMO that you might be feeling, missing an opportunity, and not act on it. Certainly not chase or any of those crazy things. Look at this goofy little thing right up here, huh? What's all that about, do you suppose? Get some tea, I'll be right back. Well, well, well. 10 minutes to the power hour. I swear to God, it no matter how quick of a break I take for some food or shower or whatever, something always happens. I guess I'm going to have to quit. Wait until 3, I guess. Certainly no place to be interacting at this point. And frankly, the only... Okay, let's be rearview mirror traders now. Obviously, like every time anybody does it, what does your eye immediately go to first? The first positive pattern. Boom. Here we come up through, IB statistic, come back down, just touch it, don't get under it, and up we go. Oh, aren't I a genius? Sure. How about right here? Same exact thing. And what happened here? Boop. You see? Let's try to look at that. Open it up a little bit, maybe. Okay, right there. This was actually when I was still there, awake. I mean, still in the office. Yeah, awake, that's a good way to put it. And to a lesser extent, right here. Actually, if you really want to be picky about it, back down, up. Now this is doesn't qualify because in my parameters or my setup, I want it to come down through the statistic and then back. So here we go. Wish there was a way to just, tick, 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 like make them. I wonder if there is. Hold on. Oh, here we go. I can use this. Okay. I can use the arrow keys, I guess. So there we are. Now let's see what's happening here. Let's look at this. So there's our IB statistic. In accordance with my parameters, I want to pull back inside the IB and then come back up through it, test down to it, and then go on, and then go. That would be, oops, wrong way. Sorry. That would be the continuation. There we are. Okay. Now what are we going to do? More so. More of the same. Let's see if we see anything in the next one here that's going to make it look more qualified for a setup without completely doing this in hindsight. Well, this is somewhat confirming in that you had delta divergence up here and sell side, but doesn't get anywhere. Testing again. So what have we got? Well, there is scale. Yeah, I guess that could have been, I guess that could have qualified. And would I have taken that? I don't know. But it's not ridiculous. It has all the elements of the setup that I look for. So far, let's see what happened. Don't forget we're another hour out here. Okay, and if we're in here, that's okay, 6509. So we're scaled up here. Now we're risk neutral scaled, and we're pretty much okay. Let's see what happens. Slow grind up, boy. Taking the stairs up, that's for sure. But up is up, isn't it? So there you go. Yeah, that would have been okay. Well, at some point along the way over here, they took off. Here, I guess. No, I'm not a breakout trader. In fact, that is an error in my journal, it's an error breakout, because in my opinion, for me personally, a breakout is FOMO. And I realize that it's a valid trade style. Made the turtles millions of dollars. But talking about me. And what do we need to do here? Well, we need to say we're at 9. We're in at the 9s. We need to be up here at 12. If I were to get my double targets, my full package, I need to be up here at 9. There's 10 points, and I need 2 more. So we need to be just under these 22s. We need to be up here at 21s. Just under this big liquidity that we've got living out here. And that's a big pile of it. Look at that. We got 212 down here, and look where the line is. And look how big that strike is up there. I wonder how much is that? I guess it's only 215. Thought I was gonna balloon up. So we need to get right up here. 21s to get our full double payout, or our both targets, which would be fantastic. Let me correct that, which would have been fantastic. I would be pretty happy right now. And I tell you, I've got to just, I guess, stay here for the whole 7 hours before I shower in those things. But sometimes after food or whatever, I'm just need to, out. I'm just out of gas. Really depressing though, because that was a real clean IB continuation. And I think valid, having replayed it like we just did, not to be a rearview mirror guy, but I think having played it as we did, the real way to do it, of course, is in replay. Bookmap replay is, except for the progress bar that you see across the top up here, and down here it'll say replay mode instead of live data or whatever, you can't tell the difference. Tick for tick, all of the order stuff, your position and all of the data up here and your order lines and all the graphics, exactly the same. Smooth, and I can't tell the difference. Maybe if you get way in, zoomed way into milliseconds or something, it's jerky. I don't know. It's smooth as at the level I'm interested in, it's great. I would say they're probably going to get it up there. I would say one more point, two more points essentially, and it would be at the targets. And there's nothing really to stop us that I can see. Just irrational exuberance. Oh, wait a minute now. There is, okay, 1430, all right. Trump is on at 1430. Mr. Microphone takes the stage. Wow. Every day, it seems like. Not yet, huh? I guess the 6520 would be a big strike, probably. Okay, so we're in the world famous power hour. Whatever day this is, Thursday, I think already. Holy crap. Yep, Thursday. Okie dokie. Six hours. Well, we've got an hour and change left to go here. The stream starts every morning at 0800 with an introduction and run around my platforms here. Then we take a close look at the numbers and what kind of the pre-market, what has happened overnight, and what I expect, or I'm anticipating what happened in the open. Do the statistics, align all these statistics up with all of these, column title and all these statistics were put in before, around 8:15, well before the open of today. You can see how they worked out. And then we open and continue this fun through the 1500 cash close. The idea being full transparency and accountability. No trades are taken off the stream. Notice that this is my monitors instead of just an application. Time or minutes and seconds and dates ties up here. Now, I don't believe in tracking your P&L or your positions or anything in dollars, but it's all in ticks. So that's important. And I sometimes forget this, but I don't want that. I sometimes forget this, but there's also a pretty in-depth record here of trades and wins and losses and everything, which does bring the P&L in dollars. I haven't figured out how to set this one to ticks, but anyway, it lists everything out in detail. Additionally, all trades are graphically represented in the heat map. There's a triangle pointing in the direction of the trade. There's a stop. There's both targets, a break-even line, all that stuff. So I don't think there's any question about transparency. I hope not. For the obvious reasons, it's important to me. I don't know what the USTR is. It's such crap. Have we gotten there yet? Nope. I think somebody ought to send that NVIDIA CEO back to China or wherever he came from if he thinks that selling them their top AI chips, which have absolute direct military application, is a good idea. I don't know what the hell is wrong with that guy. I don't know what's wrong with us, but here I go, thinking again. Of course, it's only about money because, you know, a month and a half ago, we were charging anybody that bought oil from Venezuela a 35% tariff on top of their whatever else they had done, put on them. Day before yesterday, we imported, or based on the license granted to Chevron to pump and import Venezuelan oil, i.e. paying hard dollars to Venezuela to prop up the Maduro regime, 750,000 barrels last week. Pretty amazing. I guess the inconsistency is probably the lack of the thinly veiled motivation is probably the most disturbing thing. Come on, man, get up there to 21 and get that second target now, and I'd be all happy about everything. I would be quite happy if I'd have taken that trade properly. Sat in it for a couple hours and gotten both targets out. That would have been a nice way to end off the eval on all these 5 accounts. And it would have definitely been over with now. I could have trailed up here to below any one of these swing lows and be well in the money, so no problem. It's going to happen here now anyway, but that would have been really nice. Very disappointing for me. Simply that I wasn't here, I gave in to putting the medicine in my eyes and taking a shower, putting the medicine in my eyes, and was away for this period of time right here. Came back right there. Crazy. Well, they are definitely toying with it, huh? 21 would be the 65.21 would be the second target, assuming entry here at IB high. Just for lack of anything better to do. Certainly not implying I did that or, you know, being a rearview mirror trading guy, but you do have, I mean, the point of all of this is to analyze, obviously, to track and anticipate what's going to happen. But if you didn't, you also need to look back and see what you didn't act on and why, or how that would have been better, how to improve the process and the setup and the parameters. So. Our volumes dropped back down again. It had gotten up about 95% when we took out that high, and now we're back down to 85%. This is relative volume, and look at how our ATR is just broken off and consistently traded down. We're now down to about a 2-point range. Interesting. What's going on over here? What's this thing doing? They're toying with our affections up here. Pretty nice, clean, clear IB continuation after right about here, obviously. Really no heat and pretty much a consistent, one of those typical take the stairs up and then you're always suspecting take the stairs up and jump out the window down. But, you know, in this situation, under the general situation of where I am account-wise and stuff, I would not do the typical leave my stop in one place and not touch anything. I would be trailing up behind these swing lows. Just to lock it in, you know. And that's the next piece of the puzzle that you have to, after you've vetted the setup, the next piece of the puzzle that you need to do is figure out an optimized process for trade management after once in the trade. The reason during the vetting process is now I don't touch the targets or the stop by and large because I'm trying to develop the statistics for this setup. How could I possibly have a statistic that would, for example, a statistic I would be interested in, over 100 trades, I achieved T1 50% of the time, I achieved T2, you know, another 50% or whatever. And I took so many scales and scratches, and I was stopped out X% of the time. Well, how can you possibly do that if you're changing those parameters? If one trade, the T1 is 3 points, and the next trade it's 5 points, and the next trade it's 1 point, or the same with the stops, you can't do that. So in the vetting process, you have to put on the setup with the parameters that you've decided to go with and run with it. Then it's called optimize after that. And it's so much easier to be able to do that programmatically, but I still haven't landed on a real good way to do it. A bookmap, IRT works pretty well, but I'm not as good a coder to have it be efficient and fast for especially for the what if stuff. It does have an optimization and a reality mode, and the reality mode is a walk forward. The way those two things work is you back test over a specific period of time, let's say, or what month are we? We're the end of August. Okay, so let's say you back test over June and July, just as an example. And you get a parameter of whatever, 40%, 50%, whatever it is. And then you do the reality, which is to apply those same parameters over August. That's called a walk forward. And you want to do it on a lot bigger periods of time, but that's how it works. That is how it works, both in theory and in practice. And if you're a good code monkey, then you can really do some fantastic stuff. If you're an old cowboy, then it's a little tougher. Take my word for it. Take my word for it. Oh, yeah, this is something else, isn't it? Well, we put in another all-time high so far, so I'll keep jacking this thing up here today. They finally showed them who's boss. I told you they were going to do that. My prediction my anticipation yesterday, pre-market or day before, was that we would do that before the end of the week. Simply because I've been around this long enough to know the RTH traders just can't sleep at night if they think that the ETH guys have got a record or something, some big line in the sand or some record or some all-time high, for example. They lasted a couple of weeks, and then we just had too many things lining up. The NVIDIA deal, the end of the month. It's the end of this. We're coming down to the last day of tomorrow of this ridiculous, real slow period. We got Trump taking the stage in 5 minutes, so that's absolutely the end of any possibility for me to engage. That is an undefined critical risk no political statement at all, as I've said it earlier in the stream, and I try to frequently. Sometimes I'm dismayed by the things they do, but there's no political statement involved. It's just if you cannot define a risk for whatever it is you're doing, trading, project management, whatever, and develop a risk mitigation plan for that, that is a real serious thing. That's one of the most serious things they teach you if you're going to be a professional project manager, PMP, whatever. And that's the case we have. That's the case that we have now with the people who are extremely fond of cameras and microphones. Seems to only be a handful of them, but you never know. You know, right now they're going to have another executive order signing for God knows what for. I have no clue, but that's one thing. But the undetermined critical or unidentified critical risk could be some offhand comment that you don't know, that just shoots a hole in the market. Or we're lifting all tariffs. We thought that's a bad idea, and then you get out of the way because the thing's going to go up to the 700s, 7,000s. You know what I mean? So that's how it is. That's why it is an unidentifiable critical risk. By golly. So, looping through the backtesting idea here. My second profit target, assuming entry at the IB here, this is purely hypothetical, would be 21. So we'll see. Did they get there? I don't think so. Nope. Looking at the backtest story, this is the trading system definition where you can set up a backtest by creating these rules. You can optimize it if you want to do that. You can send it to the chart, so you see a plot over here, or you can run a backtest. Now, this happens to be in the IB continuation, which I've been working with, and these are the rules. What I basically did was, for all of these IBC, IB failure, and will do for any other setups that I've had, first of all, inconveniently, as opposed to Bookmap, where you have the multi-bracket, you just set up a stop and targets. Bookmap is smart enough, and multi-brackets is smart enough to know if you've gone long or short, and then apply the rules accordingly. In a backtest, where this is strictly driven by a computer, and as would be the case for an algorithm, you set up all your stuff for long, all your stuff for short. These are end of day. If we happen to be, in other words, if we're in a trade at a certain point from the end of the session, which I have determined by VPound variables, it closes them out. And then these are the two entries. So now I can leave all of this stuff the same and just change the entries, which is something I have just done with, wherever the hell it went, IB failure. Let me just, something I was working on a little bit ago. So I have an IB long and an IB static failure. This is based on some rules that Rod has shared with us. I was working on those for the IB failure. All right, but we're going to stick with the IB continuation trade here for now. And these are so that's how it works. And you set the rules up to do various things. If you're going to go long, you build the rule, and then the actions that the rule takes are up here. It's going to buy to at the entry, blah, 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 right? And you can the rules look like this would be the entry rule that I've built for the long. And there are similar ones for the short, and then there's the take profits and the stops and all that. Same, just, any of you coders, it must look real simple for you. And then you can set up the back test, which is the instrument, the contracts, what session you want, how many days do you want? Let's make it 5. Just for the hell of it. And then the reports that you're interested in, and you can go, okay, now you have two options. You can backtest, which gives an extensive set of pretty impressive reports, or you can push it to the chart here. So first we'll run the backtest. That's how long it took. Oh, net loss. So this IBC had a net loss with these two rules over 5 days of one stop. There were something's definitely wrong here, because something is definitely wrong because we only took shorts. It hasn't remembered. I know what I did wrong. Sorry. That's the results. I'm having problems with the IB failure. I'm having problems with the IB failure on the long entries. So that's why I moved it to the IBC, which has got both. Now let's see if we... okay, let's see if we get it this time. I don't know. No, so something's wrong here. IBC anyway, the way the reports would, that's crazy. Anyway, the way the reports would work is this. The data that you need there, this is my first go-to, which shows me what the maximum drawdown is, because I know 2 contracts, how much. Unfortunately, IRT only displays this data in dollars, not ticks. I don't know how to change it. And they don't have Chads left, so the good support that was there is not any longer. But I know that 2 contracts at 12 tick stop is $300. And the largest winning trade is wrong, because this should be $750. So something has gone screwy with this, even though I didn't change anything with the IBC deal. But you see how it works, and it tells you the win rate percentage and all of those things. And then last but not least, that was about that should be about 47% profitability. So the maximum profit $750, maximum loss $300. I've already done that a bunch of times before, and until last night when I was messing around trying to get the IB failure to work. So here are the trades. And scratch. This is, oh no, that is correct, because this is 300. This is 150 because it's an end of day. And then a full stop. So there you go. And another full stop. Scratch, $300, full stop, $300, so it's correct. I mean, as far as it goes. Now, without looking back here at any of this stuff, but that's that. So that max profit would be right, because it was an end of day. Let's see what happens with 10 days here. Now you got me curious, right? Well, that isn't a hell of a lot better. But let's see, yeah, 750 and max is 300. Oops, wrong one, sorry. So that's max loss, that's max profit, that's correct. What was that again? So we had 5 long trades and 4 short trades, and we barely squeaked out with $50 profit. And you look at the trades over here, and there's a lot of parameters I can change, you know, and I don't, you have to be really careful that you don't set this up to curve fit how many days your look back period is, because that's just ridiculous. Scratch, stop, full short entry, T1, cover, T2, cover, scratch. So we got a long scratch, scratch, end of day that we had before, and our 2 stops. So we're getting longs and shorts. We got a profit, and we need to look, I will need to look back at, I'll need to look back at that, at the parameters, for example, the end of day 1 and things like that. And now just for sake of the stream and nothing better to do, while Mr. Microphone's on stage, this is how you send it to the chart. And what you do is you go along here, and now here's, come on. Sometimes IRT is hard for me to get to use, and it seems to be hanging up sometimes. So here we go with how this is how it plots it on the chart. And I'll say right at the beginning that I can't change the parameters in this original thing, which is right here. Oops. Let's see where I can do it. Right here, maybe? No. Here. You can only set one profit target. And this is for doing something else. But you can't set 2 profit targets. So what I'll show you here is that here's the parameters and the entry. Here's the first profit target. Doesn't reach the second one. IB continuation, right? And comes back for a stop. Now, down here, the totals, as you saw in the back test, the totals add up right. But here, it only shows -12, when in reality, it would be a scratch. And you can just scroll along here until you see something you like. Same idea. +12. This was the end of day, because I have the end of day set for 12 o'clock. But there's the entry. This bar was the first take profit target. You can see we had a little drawdown here, and then we didn't get quite to our 48 points, ticks. And this is where we took it off at the end of day. That's how it works. So there you go. Now you know how the backtesting can work, especially if you're a wizard, which I have lost my pointy wizard hat and my magic wand. As soon as I find that, I'll be all set. And again, you know, we haven't reached the T2, boy, and this is where you really can get frustrated. When you get within 2 ticks of your second profit target, and then this kind of thing happens. But what we're going to do is we're going to hold on for 21 and see if we get it by the 1500. Ooh, and I didn't even call I didn't even get around to the bottom of the hour. So we're in the final throes here of the cash market. We're at 1440. We're going to have the market on close orders in 10 minutes. And let's take a quick trip through the recap. Well, there's the recap. That pretty much says it all, doesn't it? rotational, and based on who knows what up here. Rotational day, pretty much. We did take out this new all-time high. What have we got staring us down for tomorrow here? Economic calendar tomorrow. Ooh, core PCE. These are 730s. Chicago PMI, Michigan number, that's always a mover, and for some reason they always have 2 stars. Don't know why. And then the usual suspects down the way here. There's no earnings tomorrow. I already know that part. Not again until Tuesday, and then Thursday and Wednesday the 3rd, or Tuesday, Thursday's today. What am I doing? And then there's Tuesday and Wednesday. So let's see if there's any extra stuff going on here. This is the typical Trump noise that's happening. Usually they put some picture of him in a video or something if you just can't restrain yourself from watching that. And that lets me know that that's in action, so I stay away from the market. PCE, consumer spending, PMI, Michigan. Well, and Fed Cook's hearing. Ooh, that's going to be a biggie. And you'll notice that there's no scheduled press releases or interaction by any of the, administration people. And that's perfectly fine. And I'm so pleased that they do, when they do hear about them like this and like this, they get them in here. So I don't see that on the investing.com side. Remember that this is my news feed and it's free. You can filter it however you want. If you want to pay for it, knock yourself out, but you don't have to. Same way with the investing.com. Get the filters set up however you want them. Also free. And then so we've been through there. We're going to wrap the day up. Looks like about a 0.35% change, or 22 and a half points on the ES. Sorry. And here we are in the book map and rapidly approaching the market on close orders. It's the market on close order imbalance. I always say that wrong. And we're looking for 21s, right? So that's important. Why can't I get this right? There we go. See, you can't teach an old dog new tricks. Look at there. So here's our 21. This is our would-be our T2 target. And I will point out that if you have selected both in the trade control panel, that means that the active data column is hot. You see how it turns into a dollar sign? If you accidentally, or in my case, I accidentally click inside of here, I'm in a trade whether I meant to be or not. So be extremely careful about that. I do believe, like I said, that trading in the saw that bump, but I don't know why. Trading with the mouse in the active data column, I believe to be more precise and faster than hotkeys, which I've always used before. But in this environment, I have one hand on the mouse, the other hand laying on my table. I stand up all day. These are standing desks. And so for me to hotkey, I have to drop the mouse, move both hands back to the keyboard, and then enter the key. And I don't have any control over position where I can just, click over here at a place or wherever. If I want to click up here, I'm going to get long. If I go left or right click, if I click down here, I'm going to get short. If I click left click up here, I'm going to get I'm going to have a resting order at whatever price I put it at. So I really do believe that it's more efficient. Let's put it that way. Now, you'd have to think that any self-respecting trader would just poke that up there, one or two more pokes till we got up to 65.22, and at least get over the top of this one more time, wouldn't you? We got 4 minutes till the MOCs. There's a lot of liquidity filling in here already. It's coming the end of the month too, remember. So there's that. The stream will start again tomorrow at 8 o'clock with the whole shooting match of the explanation of the platforms and the numbers, analysis of the numbers and the pre-market and what I expect for the opening trades in the day. And swing by. That's great. That would be great. There we go. There we go. Well, after these many hours, 12:33 until 1500, almost 2.5 hours or 2 hours, I would have achieved T2 just then. And I would have been a very happy guy. No heat, first scale, helmet on, and up we go. And I would have all 5 contracts in XFAs right now, tomorrow. Son of a gun. A cause for FOMO right there. Not that I have any indication or thoughts of acting on that or chasing the market or doing anything, especially at this point. But, you know, in hindsight, the regret is pretty extreme for various reasons. There we go. They're going to pump it up there now, by golly. And they are signing and stuff, so I'm not going to have anything to, right here we go. He still hasn't put his picture up with the thing, the live thing, but it looks to me like this is what he was meant to do. So I guess maybe it's not going to be press deal. I don't know. No idea. We got the market on close orders in a minute and a half. Market on close imbalance. Always get that wrong. No good. Okay, we would have gotten up to that target of 22. In other words, through our 21, which would have been I think I'm actually going to put in a missed trade there, but I have I'm not going to do that. I don't know how to get it all backed up within the timestamps. I'm not going to deal with it at this time. The timestamps and chapters that I put into the that I add to the description so that you get the time log across the bottom and all that on the replays of YouTube is all hotkeys and stuff with an app within OBS. By the way. And cleverly enough done that the time of that you enter those various things, I mean, you just enter the chapters and then it's smart enough to calculate the time back to when the stream started. So if it says 2 hours, that means it would be 10:30 because the stream starts at 8:30 Central Standard. There we go. Market on close orders or market on close imbalance. 50. Looks like some buy side imbalance. I haven't figured out how to tell which is what. Sometimes we see billions of contracts. Here you go. There is 650 million buy side imbalance on the S&P. 685 million buy side NASDAQ, 465 million buy side Dow 30, and 412 million buy side Mag 7. And the reaction is the reaction of the market and the price is to go down. I'm going to have to Google that over this weekend. I don't do things through the day, Google and all those kind of things. I reserve that for the evenings and the weekends for homework. As I said, I strongly do not recommend changing your trade plan in the middle of the trading day. That's stuff that should be reserved for after the market or away from live session. And I don't spend a lot of time Googling and looking around at the other things. So tune back in at 0900 or 0800, I should say. Why is it doing that? See how it's aggregating with that red line? Why? Because I moved the time scale, I guess. Well, I'm pretty darn disappointed about this day. That's for sure. That's for sure. I will probably replay this section right here, so I'm looking at about 12:30. Just to be sure, as I ran it back, and then tick forward here on Bookmap, that's one thing, and it's pretty hokey for sure. But when I replay this time frame and today's session on Bookmap, it's exactly as it's happening right now. So I'll be able to actually judge, and by actually happening, I mean, the volume profiles are the same and all that stuff as they were at this moment. Then I can have a lot better idea if I just truly blew that and missed that setup, which is my suspicion right now. But I was just picked the wrong time to put the medicine in my eyes and lay down. Sucks. Truly sucks. You can't imagine how much I would have appreciated that and need that. So, and we just keep getting higher. Isn't it cute? I'm telling you, this market is going to fall on its ass. That's my prediction. I just want to be in a situation where I can be trading it the right direction, not vetting anything, and getting in a get paid for it accounts. That's really important. I believe. So we've got 5 big minutes in the day. We are at 6:55:05 on the stream. I see no need for extending it all past 1500. Yesterday was very interesting with the reaction of the market, because I did that because the release for NVIDIA was within yesterday's real trading range, right? The official futures market closes at 15:15 Central, but they were sure as hell still trading them. I don't know how that works, to be honest with you. And I probably should, but I never traded at that time, so it isn't really in my wheelhouse. I don't know. I don't know what exactly they're up to here. All right, 3 minutes till that witching hour. I hope you had a great day. If you did trade, I hope you were process driven about it and traded it from a probability point of view, and are infinitely rich at this point. Trading is really not the big bugaboo that it's advertised to be, especially with regard to emotions and stuff. You are an adult. Just think of all the things you do every day, or that you don't do every day, that little kids do, for example, and that's because you're an adult, so you don't overtrade, and you don't have FOMO, and you don't revenge trade because you're an adult. Just if you approach it like that, I think you'll, and also it's important, in my opinion, I hope I said this more than once today, your subconscious mind believes what you tell it, especially if you verbalize it out loud. If you keep telling yourself you overtrade and you have emotional problems or whatever, by golly, you will. Your subconscious mind will go, oh, okay, that's what we have. Let's do that. I'm an adult. I don't overtrade. I'm an adult. I, trade from probabilities, and I take A+ trades. You will. That's, I really believe, a huge piece of the puzzle. And we have one big minute and 10 seconds or so for 15 seconds to go. Pop this up here for another irrational exuberance display on the part of these guys. So remember, tomorrow morning at 8 o'clock, we'll do the whole pre-market thing and the numbers and put all this, go through how you determine the open type and the statistics and set everything up, and then trade the day. And live to trade another day. Here comes the liquidity jamming in on the close. $30 seconds. And the last minute VPOC migration. They do that very frequently. And there is 1500, by the way. Okay. I think that's about all the damage I can do today. I'm sure disappointed about myself right here. Boy, did I pick the worst time in the... I don't know what to do about that. Well, not worry about it, I guess. There's always a string of opportunities in the market, and there is no such thing as a missed opportunity. There's only the next one. I think that's probably the best way to look at it, but it is frustrating when this would be right in my wheelhouse for the IB continuation and to both targets, and would have been quite a reason to be pleased this afternoon. Not that I'm unpleased, I didn't lose a penny, but how do you look at a missed opportunity? Exactly. So 8 o'clock in the morning, here we go. Be there, be square. Have a great night. Do something for yourself, your family, your health. Get away from the screens. Take care of yourself. Remember that your mental state, your physical state, plenty of sleep, hydrated, all those things feed your brain. Takes a lot of energy, and this requires your brain. So take care of yourself. It's important, and give yourself an edge. You know, that's all of those things contribute to your edge, and that's what is making you the money. If you're looking at this as a business, if it's an adrenaline rush with a cocktail beside your desk and you're just having fun, like going to Vegas, that's good too. But you know, and have a lot of fun. But that's not what I'm about. So that's where we are. All right, take care, and I'll